shift entirely. And from a borrower's perspective, where I advise clients, the coupon opportunity here is fleeting, right? We've had a moment in time where rates rallied pretty strong. Spreads obviously corrected in one basis, and there was an opportunity to de-risk your funding plans at lower levels than what we've seen all year from a fixed coupon perspective. Obviously, that has shifted as rates have sold off, and any rate risk higher, again, if the Fed decides it's only a 25 basis point move, or the messaging out of Jackson Hole or whatever starts to lean a little bit more hawkish, I think we're at risk of seeing that opportunity pass us pretty quickly here.
So you need to see the 50 basis point move to hold out. Talk to me, I ran through the issuance, obviously we had closure and then we'd reopen, but you say the demand was really, really pent up, and the oversubscription on some of these issues was strong. Just talk me through how that looked.
Yeah, I mean, it was clear to me from the order book behavior this week that investors had been waiting for this, like I mentioned. We had oversubscription levels on Tuesday and Wednesday of this week that were near 6 to 7 times, where on average our market is more like 3 to 3.5 times. So a massive amount of interest plowing into our calendar. New issue concessions gapped ever so slightly wider on Tuesday as we were reopening the market, but we've come right back into sub 5 basis points. So think about that. The risk premium is under 5 basis points to access the market right now for investment grade capital. The pockets are really deep. I think investors, again, are looking at an opportunity to layer in at spreads they haven't seen really since late of 2023, and they feel like now is the time. And so, our market, again, priced $54 billion without much hiccup. $34 billion of that came on Wednesday of this week, our biggest day of the year, 17 different transactions. So, it certainly feels like investors were ready and prepared to put capital work when they saw the right entry point.
And Matt, this comes back to the point you talked about credit outperforming the other assets, having outperformed by 1 sigma relative to, let's say, Treasuries, VIX, and yen. That robustness in credit remains so long as there is not some huge hard landing. And is that what drives that appetite that Maureen has just referred to in terms of, get in now, pick this up, because it has been resilient and something really brutal has to happen to unseat this credit investment?
Yeah, so kind of 2 good questions there, I guess. The first is, we think the demand's going to remain strong. Part of that is $6 trillion in money market funds and a lot of our clients that have really been parked in short-dated credit. So short-dated investment grade has been a core holding, not just for fixed income, but broad macro investors. And so if the Fed really is embarking, as we believe, on a series of cuts, we have 2, but the bias is probably 2 to 3 this year, and a sequence of cuts next year, we think clients do have a little bit of FOMO, fear of missing out on the duration rally. And so we do think clients are not fully positioned out the curve and out of cash. The second point I think you're alluding to is what really disrupts credit. I don't think it will be fund flows. The 2 things we really think structurally over the last 3 decades are either a hard landing, you need a recession, and that has to be codified, and we just don't see that in the data, both macro but also credit. The second is a systemic shock. And I think that's what's reassuring with the performance of lower rated credit in high yield and loans, the performance of financials. It wasn't pretty, but it wasn't ugly. And I think underlying this, that's the second question, right? Either is the economy hitting a hard landing, or is there something else that's going to break? And I think part of that's difficult this cycle because a lot of the areas people are concerned about with credit vulnerabilities are either in private markets or in non-mark-to-market assets.
Well, let's see whether that yen carry trade really has 3/4 undone itself. Team, thank you very much for joining me. That's Matt Mish over at UBS, Maureen O'Connor at Wells Fargo on the credit markets. Still ahead, the final spread, the week ahead. Traders waiting for the latest US CPI print. This is Real Yield on Bloomberg.
So a number of people, I think from Homeland Security and or the CIA or NSA, have gone to Capitol Hill and said that TikTok is a danger to our national security. But the public hasn't been given that much detailed information about what the threat is. How much of a threat to our national security is TikTok?
The People's Republic of China acts adversely to the interests of the United States in different ways. One of those ways is through the dissemination of disinformation, the intentional communication of false statements, and TikTok is an extraordinary avenue through which to disseminate disinformation to millions and millions of people.
I'm Menace Cranny. This is Real Yield time for your final spread. This is what we got coming up on the week ahead. Monday, we're going to get the U.S. monthly budget statement. Tuesday, it is U.S. PPI prints, along with remarks from the Atlanta Fed President, Raphael Bostic. Plus, you're going to get retail earnings rolling in from Home Depot. Wednesday, it is about the CPI figures coming out. That is the all-important focus for the market. Thursday, you're going to get U.S. retail sales and jobless claims again. Big outsized response to yesterday's. Walmart earnings hit the tape finally on Friday. You get UMich Consumer Sentiment Survey and a little bit more Fed speak for you from Chicago Fed President Austin Goolsbee. For my final thought, this is a look ahead to the CPI numbers. Look for a bump on the core.
Arch has laid plenty of groundwork for future revenue, but for now, Mark Messler's most pressing challenge as CFO is conserving capital.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, and but we also have to be nimble around that as well because things change by the day.
Archer went public in 2021 in a reverse merger with a SPAC, Ken Moelis's Atlas Crest Investments. Through August 2023, the company raised over $1 billion from investors including Stellantis, Boeing, United Airlines, and Cathie Wood's ARK Investment Management.
Does that ARK investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
Very good afternoon. Welcome back to Bloomberg Markets. I'm Menace Cranny. A quick check on these markets. It's been 4 weeks of decline in the S&P 500. There's been a wholesale reappraisal of risk, hard landing, the response mechanism from the Federal Reserve. We're dipping into the red as we go into the close this Friday, and that's coming off one of the biggest rallies that you've seen since 2022. Bank of America say the data has yet to flip into hard landing zone. UBS say if you get rate cuts and a reasonable growth level, you've got 17% upside in the stocks. NASDAQ down by an eighth of 1%. Of course, this is deeper into correction territory relative to the S&P 500, which has bounced from that near drop of 8.5%. 10-year government bond yields, again, the narrative is here is what is the Fed speak going to be at Jackson Hole? You're going to get CPI next week. Bond yields at 393. You've had a 30-point range from this time last week down to 366, back up to 393 this morning. And this is all coagulating around whether you really believe the yen carry trade has been undone. Just to put it in perspective for you, some of the moves in the S&P 500 really quite dramatic at one juncture across this market. There really was a hefty slide on these markets. This is what else we've got for you. You can see Expedia up by over 10%. They say better than expected second quarter results, but they did warn about a softening in travel demand going through this current quarter, and that could lead to lower expectations for the rest of the year. Roll it over, have a look at Cisco. This was breaking news in the past couple of hours. Stock down 1% now, recovering from its lows. We understand that they're set to lay off thousands of employees, according to a report. That's the second round of layoffs this year. As sales growth slows, Cisco announced 4,000 job cuts back in February. Just think about that in conjunction with your Intel announcement on job cuts there, and you begin to understand the size and the scale of the downsizing to come in tech, the resizing. Let me just use the word resizing. Taking a look at the 7-day chart, as I say to you, puts the whole thing in perspective. It gives you the jobs report last Friday, which is and that massive paranoia about the unwind of the carry trade from Japan, and that cascaded lower, fed behind the curve, growth scare, a multiple of things which really cascaded into this market on Monday. There's been incremental levels of reprieve as the week has gone on. Let's put it in context. Let's get over to BMO Family Office CIO Carol Schleif. She joins me now. Carol, good to have you with me. I mean, you can see from the drama on that chart, the confluence of negativity on Monday about Interfed meeting, rate cuts along with 150 basis points. That has soothed a little bit because the decision-making or the thinking out there is that it may not be just as a hard landing as we had presumed on Monday. You've had 5 days. What's your take as you close out the week?
Well, it's really nice to have a bit calmer Friday and hopefully a calmer weekend than we've had the last few weekends, so that part is reassuring. B, the scenario where you have a negative Friday like you did last Friday and then everyone sits and frets all weekend, that exacerbated some of this because a lot of those issues that the market really grabbed and put together on Monday have been there for a while. And it's also important to remember when you take a step back and look at it that we had very low volatility through much of this market move, and it's not at all uncommon to have markets pull back by 5 to 10%. A lot of times they're spread over a few days instead of such a compressed period. But we were in the camp where we had been building durable portfolios going into this and the ability to ride through this. We'd also been saying we didn't think that we'd had enough volatility in the year, so we wouldn't be surprised to see a 5 or 10% pullback, and that the underlying economy is pretty durable. And as we've seen this week, we've gotten a lot more reassurance on those things, that things are bubbling along at a pretty nice pace across the spectrum, although there's areas to watch.
Yeah, I mean, I think we had that, never was there so much of a sigh of relief breathed over 1 week jobless claims as I saw yesterday, both in the bond market and in the equity market, which just shows you we're almost like living day to day. David Solomon over at Goldman Sachs said, look, this whole move may even be healthy. I look at the earnings. I was chatting to our earnings team this morning. Earnings in the second quarter were up 12%. So if it's not a hard landing, earnings are reasonable. I've just had JP Morgan with me on Real Yield talking about a back-to-back 50 basis point cut. If we get anywhere near 100 basis point cut in 2024 and solid earnings, what does that do to the equity market exposure for you?
Well, I think it's important to remember whether or not you get the cut, the market's pricing in those cuts. When you look at where the 10-year has gone and you look at even mortgage rates coming down and you're seeing an uptick in home equity loan applications. So there's stuff in the economy moving, whether or not the Fed moves 25 or 50 basis points in September or beyond that. You've got that piece of it. So I think what it does, though, is that you've got pretty sturdy underneath the economy in general. It's also been very nice as we've seen the earnings come in and you start parsing through individual companies. There is that attention to margins. So you're seeing top line growth, but you're also seeing bottom line beats. And those bottom line beats are because companies are going into this strong market we've had and been very careful with what they're doing.
As the week progressed, I think we moved off the base case of deep growth scare and a Fed so deeply behind the curve. And that debate is still there. And I think we'll have a volatile debate between probably now and Jackson Hole, and hopefully we get some clarity around Jackson Hole. Laurie Calvasina, along with Michael Hartnett, are both saying, look, the hard landing is not confirmed yet. Laurie was talking about holding this 200-day moving average, and if you move below that on the S&P 500, you're then into growth scare, and you're then in territory, Carol, which can see a much accelerated sell-off, maybe 14, 19% from the highs.
Well, I think it's not unusual to, markets flirt around those 200-day moving averages. They don't necessarily hit precisely. Sometimes when you have the intensity that you had on Friday and Monday, you'll see things in an intense move, daily move like that, things go down a little bit. But it's really an aggregation of the data and an aggregation of what's out there. And we do not suspect that. We still think there's enough underneath this economy to be supportive. Consumers are fraying at the edges, but if we get rates coming down and the rates on those credit cards and hopefully some prices coming down as well, especially as we enter this back to school season, we continue to think that the aggregate of everything, whether or not you briefly touch through violating a 200-day moving average, a piece of it depends on where it settles, a piece of it depends on if it goes through and keeps going, but we don't suspect you'll see that.
How important is fast money flow in this, Carol? And I ask you that because a lot of institutional money had actually already exited a lot of these big tech Mag 7 trades, and they were actually materially underweight that exposure. We were just catching up in retail, weren't we, in terms of July and the repricing? How important is it that perhaps they've revisited that and in theory bought that dip?
Well, I think you do have the potential to either repurchase that dip or step back in. The reset that we had was actually pretty constructive and healthy for a continuation of markets. Also, if we did get a bulk of that carry trade unwound, a lot of that carry trade went not only to buying other currencies, but also to buying speculative things and participating more strongly in technology names. So as you started unwinding some of that, we just think the fundamentals of the market as well are in a healthier position now than they were a couple of weeks ago with how bifurcated trades have become.
Okay, Carol, thank you very much. Let's see, do those technicals hold? And as you say, the nuance is important, whether it's on an intraday basis or a holding. But I think there's going to be a bit of all between now and Jackson Hole. Carol Schleif there of BMO Family Office, the CIO. As we've been saying, look, it's been a tumultuous week, a tumultuous few weeks for the equity traders and the ETF flows. Emily Grafeo joins me now with the flow show as we have it. Just finishing that conversation there, it's interesting, isn't it, in terms of those who are stoic and those who take opportunities. And you've been looking at some of the flow, and we've been seeing buying this week in terms of the inflows. Just quantify that for us.
We've been seeing net buying. It's nothing crazy here.
Yep.
We're only at about $1 billion net inflows into equity ETFs this week, but you really didn't see that rush to the exits. One ETF that stood out to me was SOXL Soxl. This is an ETF that goes 3x leveraged in index of semiconductor stocks, and it had $1.6 billion of inflows. It was the second best equity ETF for flows all week. So I feel like that's a sign that that speculation is still alive in the market. Those people still want to bid up these names that did really well earlier in the year. That attitude hasn't gone away. Where you saw the outflows, it's kind of obvious. That rotation trade that we were talking about a few weeks ago, it's over now. We saw about $2.5 billion leave a small cap ETF. EM and Japan stocks saw outflows as well. And then a lot of trading in VIX ETFs. There was one ETF that goes 2 times the VIX, and obviously on Monday when we saw that big VIX spike, it was up 84%, and then it dropped 40%.
But is this volatility, is this beginning to, it's beginning to look expensive now? I mean, we've got a whole debate. There's a great story on the Bloomberg terminal at the moment. It's one of the most read. It's about whether the VIX actually made it up to that 65 level or not. But these kind of trades, are they becoming more expensive now? What does the flow tell us in terms of the appetite for protection?
Well, we are seeing traders want more protection as the signs point to an economic slowdown. One example of that is Northwestern Mutual. I spoke to their CIO earlier this week, and he had pointed out that they had bought longer duration bonds earlier in June, and it's actually paid off pretty well. They're up about 3% after buying about $2.7 billion of TLT, which is BlackRock's long bond ETF. And they basically said that they've been waiting for a recession for a long time, as have a lot of people. But they're saying it's coming soon. The next 3 to 6 months will likely see one when you just look at how rapidly the economic data is deteriorating. So they're buying this protection. They're finding this, he called it like an equity hedge in long bonds. So we'll see if it pays off as an equity hedge.
There's a nice risk reward, and I encourage everybody to go and have a read of that, because the risk reward is really quite interesting in terms of a collapse in rates, and they really do quite nicely. But it's obviously not countered with the same viciousness on the upside. And of course, then you've got Steve Mnuchin saying cancel those 20-year bonds. It's an interesting week for markets. Emily, thank you so much for being with us. Coming up on the show, this is what we've got for you. Live 360 CEO joins me to discuss the company's first earnings report since going public, right here on Bloomberg.
And global leadership are on Bloomberg.
We are 40 millions. We're a big country, and we really depend on the aid from the world. And we depend on the aid and the position and the stance of the US. So I would like to understand, what would it mean to finish war fast? If Trump knows how to end this war, he should tell us today. Because if there are risks to Ukraine's independence, if there are risks that we will lose the statehood, we want to be prepared for this. We want to understand whether in November we will have the powerful support of the US, or we'll be all alone. Only our lives are at stake here, and nobody can just trade our lives.
Nobody covers the top global leaders like Bloomberg Television and Radio.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. The top names in business are on Bloomberg.
Middle market line draws are basically still about 5 percentage points below where it was pre-pandemic, which means as cost of borrowing went up, people aren't being quite as aggressive, and that's why the economy is slowing down. They're not hiring quite as many people. They're not buying that piece of equipment. They're not doing it because they're a little worried about final demand, and therefore they're being careful, which is unpleasant for your bank, but is okay because the companies are still making profitable and the credit quality is good.
Nobody covers business like Bloomberg.
It's your Friday edition of Bloomberg Markets. I'm Manish Krenny in New York. Stock of the hour time, Life 360, the owner of Bluetooth tracking device brand Tile, released its first quarterly earnings report since going public here in the US. The company's shares are now soaring after boosting its consolidated revenue forecast for this year. We have the CEO of Life 360 and co-founder. It is Chris Hulls. Chris, good to have you with me. I mean, great set of results, and the market likes it. You talk about where the next leg of growth is to go, and you focus on international. That's the one thing that caught my eye. Where are you going to grow the most aggressively, let's say, over the back quarter of this year and into 2025? Good afternoon.
Thank you for having me. We're extremely excited about overall growth, as mentioned, and we've been doing this for over 15 years now. And what we're seeing is location sharing is ubiquitous. A lot of the trends that propelled us in the US are now expanding to Europe in particular. People understand that location sharing is a tool. It's not something creepy. Other areas where there's strong driving culture, such as the UK, revenue growing extremely quickly as we launch the full feature set there. So I think we're going to see Europe from a monetization standpoint grow very quickly. And then the rest of the world, MAUs growing everywhere as we've really focused on taking some of these US trends and pushing them throughout the globe. And we're getting a tailwind from more generic services like the ones launched by Apple and Google are getting traction. It actually helps us because we have a very differentiated offering.
I mean, that's what I was curious to know. I mean, you can track the kids, the pets, the Range Rover in the UK. I can only imagine one of your biggest customers are Range Rover customers in the UK. They're the easiest thing to steal. But kids, pets, and seniors and things that we own, what is it that demand is strongest around?
Sure. So today, for monetization, it's families with teens. Our users actually cross all life stages in a way that people are surprised to hear. Teens use it with teens, people with little kids, aging parents. They don't all pay us. Where we monetize as families with teens because we have our driving safety features, automatic crash detection with emergency dispatch, roadside assistance, reports how your family members are driving at a fraction of the cost of the legacy alternatives. So that is driving most of the growth. But what we get very excited about are some of the things you mentioned. Elder care is not something we monetize today, but seniors are already on our product because they like being on Life 360. They don't like being on devices that make them feel old. Pets is very new with our Tile devices, but soon we'll have a full lineup of GPS-enabled Tile devices where they will be part of our membership tiers with no extra cost. So we think it's going to get people converting more and more across different life stages, which will increase net adds as we improve retention, then increase our overall applicability. So very early days for the company.
If I said to you, what's the most valuable piece of data that you can monetize, what is it?
It's not just the data, it's that we have trust and intent. And people come to us for safety. We realize the position we have in people's lives. And because you're coming here for safety, because we have all these different triggers, we know how you drive, we know where you live, we know when you move, when your kid starts a new school, even when you get a new job. Those are things, if we do it appropriately, they're moments of value for customers. Your kid's going to school, welcome back for college, getting a home security system when you move to a new location. These are all areas that we're going to move into that are really untapped and enabled because of the data and user base that we have.
Chris, tell me this. You've been an angel investor. You've been involved in lots of companies. This has been a dramatic week for technology, high drama for markets. When you're the founder and the CEO of a company like yours and your stock takes a smack like it did on Monday, what goes through your mind? What's your worst case scenario when you see that smack?
You know, the honest truth is, with the market turmoil, I did not even look at our share price a single time. I had to do it before earnings because I'm going to be talking to analysts and I'm going to get those questions, but we're in it for the long haul. We have had so many times with COVID where our downloads fell literally 70% overnight. We rebounded quickly. Everyone who bought at the bottom and was patient, they did great. Market downturn, we were quickly able to pivot to generate cash. People who stuck with us did great. So I really ignore the market gyrations. I try to model that behavior for our employees, our investors as well. We really are not taking easy wins. We're in it for the long game. This category is one that can be ubiquitous, and if we continue to execute, we assume the share price will take care of itself over time.
Well, look, you're strong and you have cash on the balance sheet. Are you ready? Are you actively looking for acquisitions? I think you said, look, we will be focused on execution at some point in the future. I will be acquisitive. Is that moment coming closer? And are you in active pursuit of a buy?
We are not in active pursuit right now. We want to finish through following through on some of the swings we had taken before the market had its downturn. when we're ready for it, if the share price continues to perform, we will have a very valuable currency. When we think about our strategy, it really is having a dominant position, and we want to be that hub for families. So anything that accelerates plans there, M&A absolutely is a possibility, but nothing is active. I am thinking probably a year from now we'll become more front and center, but we'll cross that bridge when we get there.
Chris, thanks for joining me. That's Chris Hull, CEO and co-founder at Life 360. Coming up in the show, another day, another big media company with another huge write-down on their cable TV networks, right here on Bloomberg. From our world headquarters in New York, I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. The top names in tech are on Bloomberg.
AI tools can help democratize storytelling and turn everybody into a creator. Our vision of the future is individual creators will look like Disney. They'll be able to go from an idea to a final story. They'll be able to publish that. They'll be able to merchandise it. They'll be able to do it across the franchises and stories they create.
Nobody covers technology like Bloomberg. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
August 19th. Balance of Power is live in Chicago for the Democratic National Convention.
So we've got a race here, and the sprint begins.
We'll bring you breaking developments.
Vice President Kamala Harris closing the gap with Donald Trump.
And informative analysis, all leading up to special coverage Thursday evening, including Vice President Harris's acceptance speech as the Democratic nominee for president.
As president, I will show Donald Trump what real leadership looks like.
Tune in starting August 19th on Bloomberg Television.
Bloomberg Markets with me, Menace Crenny. Paramount stock rebounding after the company took a $6 billion write-down on its cable TV networks. Paramount joined Warner Brothers in taking this step. Yet another sign of a weakness in the traditional TV industry. Hannah Miller joins me around the desk. I mean, it's an interesting reaction function yesterday to Warner Brothers relative to how the market has taken this from Paramount. $6 billion write-down. It's a truth and reconciliation moment that linear TV, traditional format, is under pressure. But what's different today about Paramount?
Yeah, so with Paramount, there's the backdrop of their pending deal with Skydance Media. It's a merger deal. And this is supposed to close in 2025. They're working towards it. Other bidders can submit offers, but there is still a lot of optimism here about how Skydance can transform the business. They've identified $2 billion worth of cost efficiencies.
Yeah, I mean, they are talking about 15% cut in the U.S. workforce. So do you think that's the beginning of a trimming? I mean, you and I sat here and we talked about, look, it is about Skydance. What does Skydance do with Paramount? How do they move Paramount forward? And you said to me, look, this is about Skydance and RedBridge coming together. Just explain to me who RedBridge are. They're the other side of the Skydance deal.
Yeah, so Skydance has partnered with Redbird Capital on this deal, and they're really drilling down here. They're saying you need to tighten the belt, trim the fat. In June, the 3 co-CEOs of Paramount said that they identified $500 million worth of cost cuts, and that they said on the earnings call yesterday that these layoffs are part of that. So this is really kicking off, a tough time for Paramount. They're going to have to really drill down, identify where they can trim fat, and make a leaner business.
Where is that fat trimming coming from?
So with these traditional TV networks, we're seeing, obviously the streaming platform is being really emphasized here. The layoffs are targeting various different departments, marketing, communications, technology, legal, a lot of support functions within the company. So it'll be interesting to see who's left at the end of this.
I mean, we saw some good news on the streaming platforms yesterday from Warner Brothers, and their ad revenue on streaming was up, their overall acquisition on streaming was up, and it's a highly competitive environment. So when you look today at Paramount, what's reflected in that story?
So Paramount did see an increase in revenue from its Paramount Plus streaming service.
Yeah.
However, they did lose subscribers. They lost over 2 million people, and that's because of a one-time event. They had a deal end in South Korea, so they lost all of those subscribers.
And yet they raised prices as well, but nowhere near as aggressively as some of the others, isn't it?
That's true. So it was only $1, $2 price increase, depending on what tier you had for their plan.
Very different to Disney Plus. I mean, an 8% rise at Paramount versus a 25% rise, let's say, at Disney Plus. Thank you so much for a little bit of context. Day 1 and day 2 on the media landscape. Hannah Miller. Markets matter the most. As we go to the close of business on Friday, I can tell you the stock market, off the biggest rally that it had in the S&P 500 since November 2022. You're still going for a 4th week of declines overall. NASDAQ is finding it tough. Again, down ever so slightly this morning. The debate is this: the size and the scale of rate cuts. You've had a narrative here over the past hour that you're going to get 50 basis point back-to-back cuts from the Federal Reserve. That's according to J.P. Morgan. Oil is up by 0.9%. We are on a retaliation watch from Iran to Israel. What will the reaction function be? Is the size and the scale of the retaliation. The market is on tenterhooks for that. Good afternoon from New York.
What's more frustrating, playing golf or being CEO of Goldman Sachs?
Oh, definitely playing golf. But one of the great things about golf is when you have a good day and you're hitting the ball and you're making pars, I mean, that's what brings you back.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything. Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Kamala Harris continues the swing state roadshow as the Trump campaign tries to seize on a message. Welcome to the fastest show in politics. I'm Joe Matthew in Washington with the latest on the campaign. We'll sit down with Bloomberg's Gregory Cordy and a special conversation ahead with Congressman Glenn Ivey, the Democrat from Maryland, with us on the campaign rhetoric, the Senate race in his state, and how to rebuild the collapsed Key Bridge in Baltimore. Our panel is in place, and so is Charlie Pellet to help us start with Wall Street. As always, a look at the markets this Friday. Charlie, how are we doing?
Well, I tell you, Joe, it's been a wild week on the political front, and certainly that describes what is happening in U.S. markets. What a week this has been, but at Bloomberg, we're going for the gold with the S&P right now up 9, gain right now of 0.2%. We got the Dow up 25, up by about 0.1%. NASDAQ back in the green right now, a turnaround from our last update, up 9 now. That is a gain of just under 0.1%. Your 10-year, 3.93%. The 2-year, 4.03%. Spot gold at $24.34 the ounce, up $7, up 0.3%. Bitcoin building on yesterday's surge. Bitcoin up another 1.5%, 60,424 on Bitcoin. And crude, West Texas Intermediate crude, ending the week with a 76 handle, 76.91 right now, up by about 1%. Cisco said to be cutting thousands of jobs in a second round of layoffs this year. That according to Reuters. Cisco shares, they're down now by 0.7%. Sweet Green shares, the salad chain, that stock ripping higher right now, up by 27.8% after last night's earnings report. So lots going on in U.S. markets. The Dow, the S&P, NASDAQ all advancing. S&P right now higher by 9, up by about 0.2%. Balance of Power continues now. Back we go to Washington. Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you. Welcome to the fastest show in politics, the Friday edition of Balance of Power, live from Washington. You made it to the threshold of the weekend. As the campaigns continue travel, we've got a couple of big ones today. Importantly, the Kamala Harris-Tim Walz campaign sticking to the swing states we've been talking about so much, Arizona and Nevada today, where Donald Trump, interestingly, is in Bozeman, Montana, for his one rally of the week here, raising questions about the travel schedule, not to mention the deployment of resources in other areas. That's where we start with Gregory Cordy, Bloomberg Politics reporter. It's great to see you, Gregory. These are obviously valuable days for both campaigns. And as we watch the Democratic ticket do 6 swing states this week, how is the Trump campaign managing itself in Montana?
Yeah, it seems almost like an October fever that we have, and it's only August. This was a question that former President Trump was asked at his news conference yesterday in Mar-a-Lago. He got testy at the question. The question was, why aren't you in the swing states? He says, look, I'm here. I'm talking to you. I'm campaigning from Mar-a-Lago. I'm on the phone all of the time. But, the two most valuable things that any campaign has is one is the hard money, the dollars, the campaign contributions to put up TV ads. And the other is the candidate's time. And where the candidate spends his or her time says a lot about how they see the map, which voters they're trying to motivate. And at this point, Kamala Harris and Tim Walz are working the swing states, and Donald Trump is working Mar-a-Lago and, as you point out, Montana, which is very important in the Senate context.
Right.
But I think both parties would agree they'd much rather have the White House.
So let's talk about this news conference. By the way, it was a news conference. There were actual reporters' questions, which is not always
including
the case
one from our own Nancy Cook, who was there.
That's right. Yeah, the couple of planted questions too. I understand from some of the folks who were there asking about various things, but. We played the greatest hits here. I don't think Hannibal Lecter made an appearance, but all the other stuff did here, including crowd sizes. We're doing crowds. So he's talking about MLK's crowd size for the I Had a Dream speech. Isn't that the definition of a distraction?
Yeah, you remember a couple weeks ago we were in Milwaukee at the Republican convention. We were talking about how after the assassination attempt, the attempt on Trump's life, he was going to be a sort of a new candidate. He was going to have a new sort of rhetoric. He was going to downplay all of those sort of greatest hits that you're talking about. And of course, we're right back to the same Trump. He can't help himself. And it doesn't matter whether it's a rally or a convention nomination acceptance speech or a press conference. He's going to go back to some of those same themes as he always does. And his divergences. We didn't get, as you said, Hannibal Lecter. We did get a little bit of an aside on the acoustics of Mar-a-Lago, how much it was worth.
18 million.
18 million, is according
Just
to the,
that room, I think.
Yeah. So it's this is the Trump we have come to know as Americans over the past 8 years.
That's the Trump you're going to get, apparently. Attempted assassination. But we're playing with some pretty hot stuff here. It's not just crowd sizes. It's racial tropes. It's stolen valor. Is this the campaign?
Again, this goes back to, I think, the comment I made earlier. Like, this feels like October. Yeah. These are October-level attacks.
October's in 5 minutes, by the way. We are in the sprint now. This is the fast-forward time.
Absolutely. Although, there used to be a day, I'm old enough to remember, when before Labor Day, both parties kind of thought, well, people aren't really paying attention yet.
Yeah, right.
We'll do some organizational work.
I keep hearing that, actually.
But no, it's a dog days. We haven't even had the Democratic convention yet. And these kind of fever pitch attacks, which have become more common in American politics over the past decade or so, certainly Trump has contributed to it. But, to be fair, Democrats also have engaged in some somewhat crude insinuations about J.D. Vance, which I'm not going to repeat here, but I think people can probably use their imagination. It's a furniture-related
something
line of attack.
Heard that.
So, this is the state of our politics now.
Yeah. Well, so let's talk about the Democrats more for a minute, because Kamala Harris is getting a lot of criticism, and you could even argue the main reason why Donald Trump did that yesterday is because people want her to have a news conference, stand there for 45 minutes or an hour, take questions, sit down, have a hard-hitting interview with a journalist. I don't know if they're at the point yet where they have to do this. As you said, we're going into the convention. There are a lot of things happening. They're introducing a running mate. But there is something real to that.
Well, yes, and as you know, because you've been in this business a long time too, the longer she goes without doing it, the more the bubble inflates.
The harder that interview will be too.
Expectations fall on that interview or that press conference or whatever venue it takes. She did take some questions, a few of them, on the tarmac yesterday, I think it was. But yeah, look, she has won the Democratic nomination for president without a single delegate voting, or a single primary or caucus voter voting for one of her delegates. Those delegates have now switched over to her, but she has not had to make the case in the same grueling primary process that we usually put our presidential candidates through of why she's the best candidate for president of the United States. She is not on the record on a number of different questions of how her views of the world may differ from the person who she has served under as president, Joe Biden. And so, yeah, those questions are going to mount until she starts to go out and answer some of them.
I still say they take the edge off by doing a sit down with the two of them, right? Kamala Harris, Tim Walz, sit down with friendly, whatever, do entertainment, whatever you got to do, and then follow it up with the hard-hitting interview.
You start with the
Here I am
shows,
giving campaign advice on the air.
Do a little bit of lifestyle-like things.
Dare I say couch? You said do the couch interview on the morning show, right?
Absolutely.
That's what's coming. Okay.
Yeah.
Campaign advice from Gregory Cordy, not me. It's great to see you. Bloomberg politics reporter, not your job indeed, but he covers politics with the best of them, and it's great to have you at the table always, Gregory. I'm Joe Matthew in Washington. As we recall the news conference at Mar-a-Lago, you saw and heard it live in its entirety. Well, we were just talking about this a short time ago. Here's a taste of Donald Trump holding forth with reporters at Mar-a-Lago.
If you look at January 6th, which a lot of people aren't talking about very much, I think those people were treated very harshly. When you compare them to other things that took place in this country where a lot of people were killed, nobody was killed on January 6th. Of course there'll be a peaceful transfer, and there was last time, and there'll be a peaceful transfer. I just hope we're going to have honest elections. So I think the abortion issue has been very much tempered down. Nobody's spoken to crowds bigger than me. If you look at Martin Luther King, when he did his speech, his great speech, and you look at ours, same real estate, same everything, same number of people. If not, we had more.
To think that was out of an hour. We could keep playing things for quite a while. The Associated Press, by the way, did a little bit of homework on that. For the record, Martin Luther King Jr.'s crowd that day was 25 times larger than Donald Trump's was on the 6th of January, not to mention some of the other things that happened that day, as he refers to a peaceful transition of power. This is where we start our conversation with the gentleman from Maryland, Congressman Glenn Ivey, with us, Democrat representing Maryland's 4th District, which I drive through every day on my way to work. Congressman, it's great to see you. Thanks for coming in.
Thanks for having me.
It's a pleasure to have you in person here. I'm not going to drag you through this campaign stuff for our entire conversation because there are a couple of issues I'd really like to hit with you. But let's start there. The rhetoric that we're hearing in this campaign is one that's concerning a lot of folks, as we're now regressing into racial tropes, stolen valor, the rest that you're hearing along with us. How does the Harris-Walz campaign respond to that?
Well, so far, I think they've been able to almost ignore it because many of those comments contain critiques within themselves.
Is that the best defense?
Yeah, I think it depends. I'll have to see how things play out. And if he keeps doing press conferences like the one yesterday where it's just one bizarre statement after another. The January 6th comments, for example, where you've had, I think, over 1,000 people have been convicted of criminal offenses, some for sedition and things like that. He keeps trying to downplay these things and act like they were just tourists there that day, but that's obviously preposterous. So, he'll keep undermining his own campaign the way your commentators talked about previously. I'm pleased with the way Harris and Walz are focusing on issues I think American voters are more interested in hearing about, some of which you just touched on a few minutes ago, like the economy.
Yeah.
And I think we have to, stay on our track, and I don't know if they'll ever get on track themselves, but I think we're going in the right direction.
Should Governor Walz clarify some of the questions about his military career? Is that part of the campaign?
Yeah, I think he's talked about that some. My view so far is that, I think the focus has been on the use of the term war. The United States was at war essentially with, over in Afghanistan at the time. So I think it's factually correct on its face. But the larger piece, he was in, I think, the Guard for 24 years, if I'm not mistaken.
Yes.
And
he left 2 months before his unit deployed to Iraq. They're saying that he abandoned his brothers in arms. That's a heavy charge.
It's a heavy charge. I think he left to run for Congress. I thought it was 10 months, too, but maybe I've got the wrong number. But the bottom line is there's no indication of any kind of misconduct or stolen valor or anything along those lines. And when you contrast that with Donald Trump, who pretty much ducked out on service during the Vietnam era. He got the doctor in his father's building to give him bone spurs deferral.
Yeah.
I don't know. I don't know that he
times,
can.
I believe.
Yeah, I don't know if he can cast the first stone. So,
well, you wonder if they're trying to encourage that debate, which would be curious, Congressman. I guess broadly, though, we're talking about. They're calling this the vibes campaign. There's this new energy that has changed the ground under our feet. You can speak to that as you wish. You're a Democrat. I'm sure you're very excited about what's happening. But have you ever seen a moment like this where an aircraft carrier of a presidential campaign turned on a dime?
No.
This has been in 2 weeks.
Yeah, this is pretty dramatic. And, the Obama campaign in 2008 had similar kinds of energy, but it took a long time for it to ramp up to that point. A little bit 1968, Bobby Kennedy, just as he was hitting his stride before he was assassinated. But that's kind of it in my recollection. And, I think she's doing a couple things with that are positive. One is she's sustaining it. It looks like the Walz pick. I know there were some people that wanted other selections, but it looks like it's worked out very well and sort of rallied the troops in any event, including, people who wanted other candidates to be picked. And I think she's also continuing to dominate the media. I think part of the reason Trump had the press conference yesterday was he's been sidelined in part by his own silly comments, but also because of the rise of her campaign. And I think he's trying to figure out a way to get back into it. They had Vance following them around for a couple of days, kind of nose pressed up against the window. Yeah, it was kind of funny. But, it's clear that they're a little desperate and confused about how to go forward.
Does she need to hold a
message.
news conference, do some of these interviews? That's the challenge right now, is that she's not answering questions.
Yeah, I don't mind, her doing that. I think it's there's going to be plenty of time for a variety of types of news conferences like that. But the introducing herself and her vice presidential candidate, I think are the way to go right now. So I like the speeches in the battleground states. The big rallies make sense. Continuing to push the high energy events make a lot of sense. And, you know, she can ride that out, I think, going forward.
I want to ask you about the Senate race in Maryland. You've endorsed Angela Alsobrooks, who's running against a Republican who's not talking a lot like a Republican. Larry Hogan, your former governor, is criticizing Donald Trump. He's very disappointed, he said, by the news conference. What we need to do is focus on the issues. He held a news conference, an interview, I should say, rather, with Punchbowl. And he was talking about his opponent, Angela Alsobrooks, of course, Prince George's County executive who's running for an historic candidacy for Senate.
Right.
Larry Hogan said, my opponent really wants to make this about red versus blue. Just Democrat versus Republican. Probably take the names off the ballots and all of our records and say you have to vote blue. Our campaign, he says, is about red, white, and blue. Is there some truth to that?
Not on the ads that I've seen.
Okay.
The ads I've seen, he's running as a Democrat, basically. So he said, yesterday I saw one of his ads. It's choosing people over politics.
Okay.
Now that is the House Democrats' slogan for this cycle. That's
what we hear from Hakeem Jeffries.
Yeah, exactly. And then he talked about abortion.
So he's not a real Republican, is what you're saying.
Well, he certainly isn't running on their issues, and he's a million miles away from, you know, what Donald Trump's focus could be, I suppose, given what his commentaries have been. The problem is twofold. One is his record, which is, I think, more significant than what he's saying now. He was never supportive, particularly of abortion rights, and so he was able to get away with that because his races for governor occurred before Dobbs repealed Roe v. Wade. Now he can't do that. And the big problem he's got is that if he does get elected, he's already said he would sit with the Republican caucus. What that would mean is 51 votes. That has an impact on future Supreme Court selections, which certainly Democrats in Maryland are troubled by what Trump's done in the Supreme Court already. And then on the abortion issue, which there's a huge wing in the Republican Party that really wants to nationalize the bans that have taken place in some states. And then you get to gun violence and other issues along those lines where, you know, the Republicans, for example, just on guns, ghost guns. You know, you can't get one Republican co-sponsor to ban ghost guns in the House, which is crazy. I mean, the only reason you would have a ghost gun is if you want to evade prosecution because there's no serial numbers on
These are the guns with the serial numbers scratched.
That's right.
Yeah,
the guns are made without serial numbers at all, just so that you can avoid prosecution. We can't get one Republican co-sponsor. He's not going to be able to duck those kinds of issues, I don't think, as we go forward.
As you consider all the questions you hear, the issues that arise from Oxon Hill, from your district, and now the need for money to rebuild the Francis Scott Key Bridge, in our remaining moment, how are you going to get that done? Is that in the lame duck? Is it next year? How do you get the money?
I think the push is to try and get it done now, and obviously what happens in November could have an impact on that in a very significant way.
Yeah.
We need to get the funding up front for the bridge because it's going to take years for the insurance cases.
So you need to get this done before the election, is your point?
Well, I'm saying
62 counterparties take $312.198 billion at the Fed Reverse Repo operation.
I think it could. Yeah, I mean, there's some of the things that he's talked about, and the Trump Project 2025. You know, policy positions. We're talking about all kinds of radical change. Another one, the House Republicans came out with a paper to eliminate building the new FBI headquarters and shut that down, even though we've been awarded that in Maryland.
That's right.
And try and move the whole thing to Alabama, which is like a little, little crazy.
They wanted to go to Quantico. Hang on.
Yeah, you know.
Congressman, I'm really glad you came in. We want to keep tabs with you, and I want to see you in Chicago. You're going to be at the DNC, right?
Absolutely. I look forward to seeing you there.
Let's make a plan. We'll meet right here on this program. Glenn Ivey, the Democrat from Maryland, Oxon Hill. As I said, we drive through the district every day on our way to work. We'll have a lot more ahead. This is Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
If I had invested with you, which I wish I had, what kind of rate of return would I have had over that 10-year period of time?
Over 100% a year on average. On average.
100% a year, that's pretty unusual.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The top names in business are on Bloomberg.
Middle market line draws are basically still about 5 percentage points below where it was pre-pandemic, which means as cost of borrowing went up, people aren't being quite as aggressive, and that's why the economy is slowing down. They're not hiring quite as many people. They're not buying that piece of equipment. They're not doing it because they're a little worried about final demand, and therefore they're being careful, which is unpleasant for your bank, but is okay because the companies are still making profitable and the credit quality is good.
Nobody covers business like Bloomberg. In tech are on Bloomberg.
AI tools can help democratize storytelling and turn everybody into a creator. Our vision of the future is individual creators will look like Disney. They'll be able to go from an idea to a final story. They'll be able to publish that. They'll be able to merchandise it. They'll be able to do it across the franchises and stories they create.
Nobody covers technology like Bloomberg. Context changes everything.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Best level of the day right now, a sudden jump for the S&P 500 index, up 25 points, up 0.5%. Last update, we told you stocks were mixed. Now they are higher across the board with the Dow, the S&P, NASDAQ, and the NASDAQ 100 index all advancing. Again, the S&P up 25. That is an advance right now of 0.5%. The Dow up 99 points, up by 0.2%, while NASDAQ is higher by 80, a gain there of 0.5%. The 10-year at 3.94%, with a 2-year that's now yielding 4.04%. Gold up $7 the ounce. Spot gold up 0.3%, $24.35 the ounce, while West Texas Intermediate crude oil up 0.9%, $76.90 for a barrel of WTI. Big day yesterday for Bitcoin, up again today. Bitcoin now up by 1.5%, 60,417 on Bitcoin. Microsoft says a hacking group linked to the Iranian government tried to breach the email accounts of presidential campaign staffers as part of a wider effort to gather intelligence ahead of the U.S. election. Microsoft shares taking part in a broader tech advance today. We got Microsoft up now by 1%. So again, recapping, best level of the day right now with the S&P up 26, up by 0.5%. Balance of Power continues, the Friday edition. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you. Nice turn here. We started with the market turning lower an hour ago. We're back in the green in a different world than we were in on Monday. Thanks for joining on the fastest show in politics with maybe not just one, not just two, but possibly 3 general election presidential debates looming. That's what it sounded like yesterday. Donald Trump said he cut a deal for 3. Multiple networks here. You had Fox and NBC. We already had ABC in the bag. Kamala Harris was asked about this idea on the tarmac yesterday. Here's what she said.
I'm glad that he's finally agreed to a debate on September 10th. I'm looking he shows up. I am happy to have that conversation about an additional debate for after September 10th, for sure.
All right, so maybe not 3, maybe 2. Originally here, right, we had September 10th planned on ABC. Donald Trump added one on the 4th and then one after. So look, we have to figure out a lot here. We need both campaigns to agree to these, but there will be a debate, it seems, and that's where we start with our panel. Jeannie Shanzano is here, Democratic analyst, Bloomberg politics contributor, and political science professor at Iona University, alongside Maura Gillespie, Republican strategist and founder of Blue Stack Strategies. Great again to have you both with us on our great panel here today. Jeannie, I'll start with you. Should Kamala Harris accept all 3 debates? Why not?
I think she should do the 10th, see how it goes. These are big stakes on both sides. It's a real test for both of them. And then she can decide how to respond. So I thought her response was fine. I think we can't forget that Kamala Harris has had something of a mixed record when it comes to debating. You can say that she's only vice president because of the way she debated during that one Democratic primary debate in 2020. So she has been effective, but she's also floundered in other areas. That said, she's grown as a candidate since then, but this is not in the bag for Kamala Harris. So I think it is going to be a test for both of them. And who knows? We just saw a debate change an entire election. So who knows what's in store for the 10th?
Isn't that the truth? Maura, I don't know your feelings on this. Donald Trump has clearly decided to just go for it, challenge her to as many debates as he can manage, having dispatched Joe Biden in a single debate. But not a lot was said about Donald Trump's performance that night outside of the mistruths, the way he conducted himself, the tone that he carried. Let's isolate Donald Trump's performance, and you tell me, should he be on the stage 3 times with Kamala Harris?
Well, what's interesting is that the Fox News debate that he announced or tried to announce yesterday isn't what Fox News actually asked him for. They initially, I believe it was later in September, knowing that the September 10th ABC debate was already locked in. Donald Trump then decided back out of it. Now he's back in, and he's trying to do a Fox News ahead of the ABC. So I think that that's also, again, Trump trying to take control of the situation, because he did come across as looking like he was scared to debate her, which is never something that Trump wants to be, characterized as scared. But I do think that when you look back at that debate, yes, obviously the takeaway was that Biden was not up for this, not only the candidacy of being president again, let alone being president for another 4 years, but Donald Trump lied so quickly and with such fervor that it was hard to really fact check in real time. And I do wish that ABC or somebody who is doing these debates would have a tracker at the bottom, with some sort of something like, X has, where you can do community notes. I think that in real time, people are being misled, and that's a disservice to the American public.
So according to 2 European intelligence sources telling the wires here, so dozens of Russian military personnel are being trained in Iran to use ballistic missile systems.
Not done any interviews yet. And, I understand her campaign as a communications staffer. I get that there is a high risk, low reward.
And the same intelligence sources say that Iran's to deliver hundreds of ballistic missiles to Russia soon.
She decides to go ahead and do these debates.
Yeah, let's get into that. Jeannie, this is becoming a thing. The fact that there's been no news conference, no big interview, and granted it's been, 2-3 weeks, I guess, for this campaign. Does that need to happen before the debate? That's it's a month away. We're talking on September 10th. I know we've got a convention in the middle of that. But does this campaign need to start being more specific in getting Kamala Harris in front of reporters to answer hard questions?
I think so. She really does need to get out there, as does her running mate, Tim Walz. They both need to speak with reporters. It is not good practice to dodge them, and I'm not suggesting that's what she is doing. But this is something that effectively J.D. Vance and now yesterday Donald Trump put on the agenda, and now we're hearing more and more calls. So I suspect we will see her sit down. To your earlier point, maybe we see her sit down for a more softball interview first and then a more hardball interview. I think that is coming. The reality of this campaign has always been, though, the person who is on the hot seat, so to speak, the person who the campaign is about, is likely going to have a more difficult time. And that's what I think the Harris campaign is banking on. Let Donald Trump go out there with his press conferences for 90 minutes talking about, how great his room at Mar-a-Lago is, and talking about MLK. The more the focus is on him, the worse it is for his campaign because he's simply not disciplined. And so, yes, she needs to talk. She also needs to keep going out with these big rallies and let Donald Trump be Donald Trump, because that is problematic for the GOP at the top of the ticket.
Maura, there are questions about the travel decisions inside the Trump campaign, with the Kamala Harris-Tim Walz camp hitting 6 swing states this week. They're adding Arizona and Nevada today. Donald Trump is in Bozeman, Montana. Then there are questions about ad spending. And this is really interesting, according to Politico, working with Ad Impact here. Donald Trump and allies still being outspent significantly in the battleground states specifically. Trump and allies spent $16.5 million over the first 5 days of August, compared with $23 million by Biden, Harris, and their allies. From the beginning of March to early August, Biden's side spent over $300 million compared with $110 million for Trump. Why are they waiting to put the money to work? Is it because it's not there?
No, I'm not sure if it's a matter of it not being there. I think, again, for a while now, Trump has felt like he had this in the bag. He also had a lot of legal issues that he still has to pay off and has to accommodate for. So I think it's a combination of things. And on the flip side, the Harris campaign, they've got to make up lost time, lost ground, and reintroduce themselves, not only introducing herself to the electorate, but also now introducing this new ticket. So they've got to amplify and ramp up their spending to make inroads in places like those swing states and the place that they think is viable to win. And so maybe it's a combination of those things. I also think Trump just kind of feels like he's got this still, even though I think he is a bit rattled by what's happening with Harris and the polls. I think maybe post-convention of the DNC, then you'll see an uptick in things, but because you're always going to see an uptick for whoever's convention is happening at the time. So maybe, after the 25th of August, we see a big September spend by the Trump campaign. But I think it's a combination of things, not directly Bozeman, Montana is a great place to be right now this time of year, but I think that it's not necessarily thought out in that way.
Beautiful this time of year. Douglas, listening to us today on Bloomberg, sends a tweet. Are you banned from discussing RFK? Why is he not on your program? If you're from Freedom of Choice, talk about RFK on your show. Now's your chance, Douglas. Jeannie, RFK Jr. got a big old endorsement yesterday from none other than Joe Rogan, who has 14.5 million followers on Spotify. Quote, he's the only one that makes sense to me, unquote. Joe Rogan on his Joe Rogan Experience podcast. This is a campaign, Jeannie, that some folks thought might be coming to an end. Does this breathe new life into it?
It very well could. And thank you, Douglas, because I love talking about RFK Jr., as you know, Joe Matthew. But
I know you do.
But this is big. Joe Rogan's audience is huge. I think it's probably a bit concerning more to the Trump side than the Harris side in terms of who he might eat some support from. I, too, have family members who are big RFK Jr. supporters. He's dipping a bit in the polls since Kamala Harris ascended. But as he is on the ballots in some key states, he's got to be somebody who we pay attention to. And so Rogan coming out for him, I think, is a big move, and something, again, I think that may be why, by the way, we see Trump with Elon Musk on Monday. If we do, you got to counter Rogan with somebody, and who better than Elon Musk?
Fascinating. I've only got 30 seconds. I'll apologize in advance, Maura. Is this disruptive to the Trump camp?
Absolutely. People who are listening to Joe Rogan have also expressed, interest in Donald Trump. Joe Rogan himself has also talked about Donald Trump in favorable ways. So I definitely think it pulls from his side, given his support of RFK Jr.
This is a very interesting wrinkle and something that we will keep tabs on. Douglas, don't worry. There's more where this came from. Great panel. Thank you both. Jeannie Shanzano, Maura Gillespie. Fascinating insights, as always, here on Balance of Power. We're going to turn our attention to geopolitics coming up. There's a lot to talk about there that's not getting the attention it deserves in mainstream media when it involves Ukraine, when it involves Israel. Stay with us after we check world and national news with Amy Morris in the Bloomberg 99.1 newsroom in Washington. Hi, Amy.
Hi, Joe. Russia has declared a federal-level emergency in the Kursk region after a large-scale incursion from Ukraine. It sent reinforcements there today, 4 days after hundreds of Ukrainian troops poured across the border in what appears to be Kyiv's biggest attack on Russian soil since the war began. Deputy Pentagon Press Secretary Sabrina Singh.
You're seeing some of these cross-border counter-fire measures that they're being able to take that are near the border of Ukraine. We don't support long-range attacks into Ukraine. We've said that from the very beginning. I'm not going to draw, a circular map here for you of where they can and can't strike, but we've been very clear with the Ukrainians.
Ukraine said it carried out a drone strike on a military airfield in Russia's western region. Flood warnings and watches still stretching from Georgia to New Hampshire. Heavy rain warnings are up in Ontario, Quebec, and New Brunswick. Post-tropical cyclone Debbie tracking all across the eastern U.S. Vice President Kamala Harris and President Joe Biden making their first trip together since the president's decision to drop out of the race. They'll appear together at an event in Maryland next week. Summer Games wrapping up this weekend. The U.S. has the most medals at 104. China has the most gold medals with 32. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Is the Vivian Tom clientele?
Yeah, power women, like the dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that is empower women.
When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, they are like in the 20s, so it's a more affordable price for them. And then, my powerful women's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
More frustrating, playing golf or being CEO of Goldman Sachs?
Oh, definitely playing golf. But one of the great things about golf is when you have a good day and you're hitting the ball and you're making pars, I mean, that's what brings you back.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week.
And so just seeing from the Kursk governor, this is in Russia, says the impact from a crashed Ukrainian drone leaves Russia's Kurchatov site of the Kursk nuclear plant without power.
Has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. U.S. stocks holding close to session highs. The Dow, the S&P, NASDAQ solidly in the green. The S&P right now up by 36 points, up by about 0.7%. A wild week in markets, wrapping up with subdued action in stocks after a surge in volatility that unsettled investors. Following its biggest rally in almost 2 years, the S&P 500 index up another 0.7% today. The Dow up 135, up 0.3%, while the NASDAQ Composite Index is up 123 points, up now by 0.7%. The Russell 2000 Index of small cap shares in the green, up by about 0.1%. We've got the 10-year yielding 3.94%, with a 2-year now at 4.05%. Spot gold higher by $5 the ounce. Spot gold $24.33 the ounce, up by about 0.2%. And West Texas Intermediate crude oil WTI up 0.7%, 76.73 a barrel. Brent, the global benchmark, also higher, up by 0.4%, 79.53. Cannot ignore Bitcoin again today. It surged yesterday. Bitcoin up by another 1.8% right now at 60,584. Getting word from General Motors that Marissa West has decided to leave the automaker only 8 months after taking the job overseeing North American operations, which is its most profitable business. General Motors shares, they are advancing today. We have got GM shares up by about 2.5%. Cisco Systems is cutting thousands of jobs in a second round of layoffs this year. This according to Reuters, citing sources. Reuters says the number of people affected could be similar or slightly higher than the 4,000 employees that Cisco laid off in February. Those cuts likely to be announced as early as Wednesday, according to Reuters. Again, we've got Cisco Systems trading lower, down 0.3%. This on a day when we are seeing technology shares advance. The NASDAQ 100 index right now up by about 0.7%. And cannot ignore the move in Sweetgreen shares today. The stock rallying after the salad chain posted sales that outpaced market expectations. It also raised its outlook for the full year. Sweetgreen shares, they are up now by 28.7%. So again, recapping here, we have got the Dow, the S&P and NASDAQ very much in the green. The S&P up 0.5%. Balance of power continues now. Back we go to Washington. Lots going on in the markets, and indeed lots going on in politics. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, we do thank you. Remarkable to see this turn, Charlie, to the positive. This bouncing around today is really indicative, I guess, of the volatility that we've seen all week, but still feeling a lot more stable than we did on Monday when people were talking about a recession and this market falling apart.
Earlier in the week, we did have the VIX pushing above 60. Looking at a VIX right now, a measure of volatility at just about 21. But certainly, at least in today's trading, there is a sentiment that perhaps the worst might have passed, just in terms of the volatility. Maybe things will calm down over the weekend. Also next week, not a big week for earnings, but next week also some key inflation data too.
That's true. CPI Day next Wednesday, Charlie. You and I are going to have a lot to talk about that, and I thank you so much for taking us by the hand this week through a very complex market when we consider the cross currents here, the carried trade in the throes of earnings season against the backdrop of weakening data. This is why you listen to and watch Bloomberg every day, right,
And
Charlie?
indeed, too, I just got to say, just in terms of the political developments this week, the comments from Donald Trump about the independence of the Federal Reserve, a lot going on in the political arena as well.
No, that's not going away anytime soon. Pretty remarkable to think that in 1 week we're on our way to Chicago, and we're going to be bringing you special coverage of the Democratic National Convention in Chicago with so many issues flying around this campaign, whether it's the economy, abortion, the border, or, yes, geopolitics. And we hear a lot about how voters tend not to key their decisions off geopolitical stories, but foreign policy might well make the grade, considering two hot wars underway right now. Not only Ukraine, but great questions about our policy in Israel. And you know that, of course, is swirling around the Harris campaign with the potential now for a ceasefire. I know you've heard me say this before, but we're following parallel storylines today in Israel. One is the anticipated retaliation from Iran over the killings of Hezbollah and Hamas officials. The other is the potential for a ceasefire with Hamas, with reporting today that the president, leaders of Egypt and Qatar say they are prepared to present a final ceasefire proposal. If you're reading the terminal, you see that new round of ceasefire talks now set for August 15th. Very important as we add the voice of Mara Rudman, professor at the Miller Center at the University of Virginia, director of the Ripples of Hope Project, focused on democratic solutions. Mara, it's great to have you back. I don't know how you have both of these stories existing at once. And I'm going to point you to one more headline that crossed the terminal a short time ago from Reuters. Biden to lift offensive weapons sales ban to Saudi Arabia. When you factor that in, are we on the verge of a ceasefire breakthrough?
We've been at this point before, as you've noted. Everything is possible, which means that I would say we're at an inflection point. We can be moving toward the ceasefire, and those are key meetings next week, August 15th. It's also significant that Qatar, Egypt, and the United States together put out the statement about pushing for the August 15th meeting and about presenting a bridging proposal. At the same time, it's very unclear what Iran will be doing, what Hezbollah's calculations are. And so the next several days are just critical.
That's for sure. I just don't get, and maybe I'm being a little too simple here, Mara, how you can strike a ceasefire while Israel is also bracing for a potential retaliation from Iran. Are you thinking that won't happen?
No, I think that the two are actually interlinked. I'm going to bring you back to something that Prime Minister Yitzhak Rabin, who was so tragically assassinated by some of the very people related to folks in Bibi Netanyahu's cabinet. But Prime Minister Rabin used to talk about fighting for peace as if there was no war, and fighting wars as if there was no peace. And living in that combined space at the same time is typical not just for this region, but for many conflicts where you've got to look for ways to talk and to get to resolution. And at the same time, you've got to be prepared to fully defend yourself.
We remember, of course, what happened in April when Iran did respond. And the refrain that we've heard across the spectrum is that Hezbollah is not looking for a wider war. Iran is not looking for a wider war. And of course, Israel is not. Do you believe that to be true?
Yes, I believe that all of the actors, for a variety of reasons, recognize that a wider war is not in their interest. Sadly, in this kind of situation, that doesn't always mean that their actions will not trigger that wider war. And the role of the United States, in this case also of Egypt, Qatar, the Saudis, of everyone else in the region and throughout the world, is to try to stress that longer term perspective, to try to keep folks away from the trigger finger, so as to speak, and to give incentives to the fullest extent possible to reach for what is in everyone's long-term interest, which is to avoid this tit for tat now.
Well, we're at a moment where a lot could happen here. And we remember May 31st, the day that Joe Biden addressed the nation, the world, from the White House with a 6-point ceasefire plan that he said Israel had signed off on. We saw, of course, in the days following that Benjamin Netanyahu may have signed off on something in principle, but was clearly not on board with the details at hand. Why should the White House trust him now?
So the White House is working with the state of Israel, and it's working as well with Qataris and Egyptians who are working with Hamas. The challenge that all of those who are trying to bring about the ceasefire face is that there are elements for Prime Minister Netanyahu and for Yahya Sinwar, the head of Hamas, where any kind of ceasefire agreement is not in their direct, immediate political interests. And yet, for many of the people around them, in the case of Bibi Netanyahu, frankly, his entire military and security establishment, as well as the people of Israel, certainly the families of hostages, are pushing very hard for the nature and scoping of the ceasefire proposal that has been laid out. And in the case of Hamas, it's not just the countries around. Many Palestinians in Gaza are brave enough, courageous enough to speak out on the record about the challenges and how much they need a ceasefire, which takes a tremendous amount of risk and peril for them, given the vicious kind of leadership of Yahya Sinwar.
Mm-hmm. We've been surging military assets into the region, even more than we already had. Mara, F-22 jets now included, several more destroyers in the region. What are we planning for? What are we prepared to do to defend Israel if this retaliatory strike does come?
Well, what we've put into the region is certainly a show of force, and part of a strong deterrence, the strongest deterrence you can mobilize is to show the willingness to be able to defend and to help defend. And so that is part of what is going on right now. Certainly the United States showing, with what you've described, what we are willing to bring into the region to help Israel defend itself, and any number of private conversations that are going on with players throughout the region, as was reported earlier today, the Jordanians, the Saudis, the Egyptians, others are all talking to Iran as well about scaling this back, about the longer term interests of everyone in the region. Jordanians have been clear about not using their airspace for either side, frankly, which is part of, I think, how the kingdom there is trying to position itself to, again, damp down actions that could really result in tragedy across the region.
Fast forward to August 15th, again, the ceasefire talks that have been scheduled, the U.S., Qatar, Egypt. Is this Secretary of State Antony Blinken, or is this Bill Burns at the table for the United States? Do we know?
It's probably a combination. I think that Bill Burns has been the primary leader of this effort, of the behind the scenes. I think that Brett McGurk, who's at the White House at the NSC, works for Jake Sullivan, the National Security Advisor, is very much kind of day-to-day hands-on, but Bill Burns clearly has a whole team as well, and I'm sure that Secretary Blinken is also very much involved. So it is a full team effort.
August 15th is next Thursday. Mara, what's more likely in that time, that we do have a breakthrough on a ceasefire, or Iran strikes Israel?
I don't want to put odds on that kind of situation. Honestly, what I try to remain focused on is what's so clearly in the United States' interest, in Israel's interest, in the interests of all those in the region, and absolutely for the hostages and their families, which is to reach a ceasefire deal. And doing so is obviously going to be much more possible in the near term if there are not actions by Hezbollah or by Iran in this intervening time period, which will certainly escalate and make a ceasefire that much more difficult.
Yeah, I only have a minute left here, Mara. We're in the throes of an important election here in the United States. To what extent would a Trump presidency embrace this ceasefire proposal? I'm assuming Kamala Harris would be in continuity with Joe Biden.
I think that's correct in terms of all signs that Kamala Harris has given. And in terms of a Trump administration, really, who knows? He has been all over the place on this issue. He was quite harsh to Israel and to the prime minister immediately after October 7th in a way that was surprising to people. He's also talked in ways he's not a negotiator, despite his "let's make a deal" kind of aura, the President Trump. He's not used to how you create win-win situations as opposed to zero sum. And this is a situation where you've got to figure out ways to get through that lead to a ceasefire deal. So I'm very concerned, perhaps not surprisingly, about how a Trump administration might handle what is going on now and kind of any future in the region.
From the Miller Center at the University of Virginia, Mara Rudman. It's great to have you back, Mara. Thank you so much for the insights at another very important moment here in geopolitics. I'm Joe Matthew in Washington. Thanks for being with us. Coming up on the late edition of Balance of Power, Amy Walter from the Cook Political Report, and the latest in my series on wine in Washington. And we'll focus on the pronounced movement of women rising into prominent roles in the wine world, including women like Jessica Liberto Husseini, we sat down with, runs the wine program at the Michelin-starred restaurant The Dabney. Democrats and Republicans have different preferences when it comes to wine?
Everybody has different preferences. No.
So you're not going to tell me the Republicans all order the big cabs and Democrats come and ask for a rosé?
No. Okay. I'll tell you, on the last time she was here, RBG drank Sancerre on her birthday. Multiple bottles. And then before dessert, went home because she was tired.
I bet that happens from time to time here. To the best of us. Meet us in the wine cellar, 5 p.m. Eastern Time, the late edition of Balance of Power here on Bloomberg TV and radio.
Liquidity is the lifeblood of an airline. We make very conservative decision making about when we raise funding and how we raise funding. We try to diversify our sources, and we're always very focused on the actual rates. And we like to build in flexibility in these financing structures so that we have an opportunity to prepay debt when appropriate, so that we can continue to optimize the overarching rates that we're paying.
What have you learned with the dynamic move of the interest rates that we've seen from Chairman Powell? I mean, do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well, because things change by the day. I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. They may not be a buyer at this point, but I do want to spend a lot of time in front of that other set that is a buyer at this point. They're interested. They want to be an early adopter of the stock. They're interested in the story.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
If I had invested with you, which I wish I had, what kind of rate of return would I have had over that 10-year period of time?
Over 100% a year on average. On average.
100% a year, that's pretty unusual.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, Bloomberg Originals. This is Bloomberg Business Week. I'm Carol Masser, along with my partner in crime this week.
I'm still here.
He's still here. Matt Miller is with me, in for Tim Stenevec. Tim will be back on Monday. You know, we kicked off the trading day, you and I, on TV with a bit of a whimper, and we actually are up on the day.
Yeah, riding up into the close. I mean, let's not oversell it, right? We're looking at 0.5% gains on the S&P, less than 0.5% gains on the NASDAQ.
Still
the Dow Jones Industrial Average unchanged. Yeah, but you know what? It's better than a stick in the eye, as my first stockbroker used to always tell me.
Seriously?
Too often he said that. Yeah.
Stick in the eye.
So the thing is, there hasn't been any of the crazy volatility today.
No.
Yes, we were down. Yes, we're up, but it's not like multiple percentage point swings. So this is the first day this week that we've seen that.
VIX at 21, though, still kind of hovering around that level. So way off of where we saw it on Monday, but nonetheless not back down to some of those kind of mid to high teens that we've been seeing a lot this year. All right, we're going to get into the markets, guys. We're going to talk about the week that was in rates. We're also going to find out what the world's biggest active bond fund manager has to say about it all. Plus, sweet. And it's not what you think it is, Matt.
Yes. Well, I thought you were talking about candy, but you're talking about salad. And there's like opposite ends of the spectrum. Sweet Green knocked it out of the park with sales. I think same-store sales were up 9%.
Pretty impressive.
9%.
Yeah, that's called pretty good.
Yeah.
That's called sweet.
Well, and that's why the shares are now up 20% from the IPO. They had been down until now.
You're going to give us some context later because the stock right from the IPO. Also, the swing state economic realities that are shaping the U.S. election. We got a lot coming your way in the next 60 minutes. First up, though, waiting patiently, as he always does, Charlie Pellet with a check on the trade. Hey, Charlie.
Thank you very much indeed. We have Matt talking about Sweet Green. That stock up today by 29.5%, ripping higher. Stocks do remain higher at the end of a dizzying week. The market, though, wiping out just about all of the losses from that Monday sell-off that rattled trading around the world. As it stands right now, the S&P 500 index on the week is down by about 0.1%. If we do close lower, that would mean the fourth weekly drop for the S&P 500 index. But right now, stocks are advancing. S&P 500 index up 0.5%. The Dow up 34 points, up 0.1%. NASDAQ up 88, up by about 0.5%. 10-year at 3.93%. The 2-year 4.05%. Gold up 0.1%, 24.29 the ounce. And West Texas Intermediate crude up 0.6%, 76.68 for a barrel of WTI. Job cuts, lots of them. Stellantis, the owner of the Jeep and Ram brands, plans to eliminate as many as 2,450 hourly positions at a pickup truck factory located near Detroit. And this morning reports that Cisco is going to be cutting thousands of jobs in a second round of layoffs this year. This according to Reuters, citing sources. Cisco right now down by about 0.4%. Again, recapping, U.S. stocks are holding on to gains right now. 2 hours to go ahead of the closing bell, with the S&P Candy up 23, up 0.4%. Sweet Green, we're going to be talking about that. Sweet Green up now by 30.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Talking the equity trade, looking at a 2-year note, just above 4%, and you've got a 10-year just below it. I mean, the week that was when it comes to rates, go back to Monday, Matt, and rates had come down so much as we saw a tremendous bond rally, but a very different thing today.
Yeah, and I actually heard Gina Martin-Adam on Bloomberg Radio this morning around 5 a.m. saying that it was really the bond trade that moved the equity markets.
That makes sense, doesn't it?
Yeah, absolutely, especially since, the kickoff or the original trigger was the Bank of Japan raising rates and the Fed saying last Wednesday, okay, we're going to start cutting rates.
Right, exactly. And then we got into the carry trade and the impact of that. Meantime, I do want to point out Fed policymakers have pushed back on the need for aggressive actions following that weaker than expected jobs report in July when hiring slowed markedly and the unemployment rate rose to the highest level in nearly 3 years. That was certainly something that started stewing all of this. We wanted to bring back Bloomberg News rates reporter Michael McKenzie. He has been with us on a journey, I feel like, this past week and through the volatility that we've seen.
He sat with us through Trump yesterday.
He did.
Thanks, Michael.
Thank you. All right. He also caught up with Dan Ivison, the world's biggest active bond fund manager. He talked about it a little bit yesterday. Michael joins us. Michael, 2-year back at 4%, 10-year just below it. Very different trade on Monday. How are you thinking about kind of where we're ending up here on Friday versus where we were and the mood and the sentiment on Monday?
Well, we clearly overshot in terms of yields falling on Monday, given all the chaos that was unfolding out of Japan and with the carry trade. And I think as we spoke earlier in the week, I said, this is a market that was worried that there could be something unraveling, a big trade going wrong, some kind of systemic issue that hasn't come to pass. So effectively, the yields have come back. But I think what's interesting at the moment is that this bond market still expects 100 basis points of cuts by the end of the year. So that's double what the Fed's been telling us. And we're also, while the 2-year yield is back over 405, around 405%, it's below where it was before we went into Friday's jobs number. So this is a bond market that's still leaning towards we're going to see more weakness in the labor market statistics, and therefore there is a need for the Fed to move. And I think we're going to see, if we look ahead to next week, we've got CPI and retail sales. They'll be important. But I think this is a market that's really going to be focusing more on weekly jobless claims, which is what we saw yesterday. And, of course, the big monthly payroll report that comes out the first week of September.
But we're not expecting to see moves the likes of which, Jeremy Siegel, for example, on Monday was calling for a 75 basis point emergency rate cut and then another 75 basis points at the meeting on September 18th. Meanwhile, in a survey of economists, we found actually 4 out of 5 economists, so the vast majority in our survey said it's only going to be 25 basis points.
Sure, and I think the response to the bond market is, and again, this is kind of something that Dan Ivison at PIMCO told me earlier this week, we do know in past cycles when employment starts to go, it can go very, very quickly. We do have a Fed that has been signaling of late that they are focusing on the dual mandate, not only inflation, but also labor. Chair Powell last week told us during the press conference that there were real downside risks to labor. This is what's got the bond market on edge here. And this is why they're sort of pushing ahead, because you're not going to benefit from a big drop in rates if you wait for the data. So you're having to sort of roll the dice a little bit. It's a probability. What do we think are the odds of a harder landing potentially beginning to come through to fruition? And this is why the market is still pricing in 100 basis points of cuts. Now, if you get a solid payroll report for August, the first week of September, then this market will have to reprice, and it could be pretty nasty.
But by the way, do we see, in your experience, and Michael, you've been at this for a long time, do we see layoffs come fast and quick when they do come, or is it a trickle? I mean, does unemployment rise on an elevator or an escalator?
It tends to rise on the elevator. I mean, that's what's really interesting when you do look at past cycles. The unemployment rate starts to get going. And so a lot of people have been talking this week that unemployment is, I mean, if we look at the current rate of unemployment at 4.3%, that exceeds the median set forecast from the Fed officials themselves for this year, next year, and the following year. So we're already moving beyond what the Fed was signaling just back in June would be a likely the correct call for unemployment. So it's moving ahead of what the Fed was thinking as recently as June.
How difficult is this moment for the Federal Reserve, or do you think it's very clear? And I guess I'm thinking about historically when you get to the point where you're ready to go in a different direction when it comes to monetary policy. How tricky and difficult is it, Michael, to getting it right? And yeah.
Look, this is always, there's a reason why we only really had one soft landing, and that was in 95. Soft landings are extremely rare because ultimately the Fed does overdo it. If you look at the prime borrowing rate, at the moment it's sitting at 8.5%. Now, and inflation adjusted, that's around 6%. That's really tough for a lot of small and medium-sized companies. And this is why, with the Fed having been on hold for a year now, the yield curve is now coming back to, this week it briefly got turned positive, but typically when the yield curve becomes positive and really starts to trend, that's the kind of when the bond market says we are in recession and the Fed is really behind the curve. So at the moment, you could sort of say we're kind of poised here on the precipice. We don't know whether we are going to be tumbling down. We don't know whether we can still stay here. And that's where the position the Fed finds itself in. It's why they keep saying we're data dependent. But into the mix, of course, is that we do know labor is a lagging indicator. And this is why the bond market is feeling pretty confident, I think. They've had a lot of pivots which have backfired spectacularly over the last year and a half. But I think in this case, they are pretty confident that labor is slowing. And it really is a question of just how much does it slow? And then for the Fed, they're having to grapple with that as well. And the Fed officials do know from history, they have been behind the curve ultimately, which is why when they do start to cut, they tend to cut pretty quickly.
I wonder, I was thinking about our survey of economists, and I was then wondering if market strategists feel the same way. Do you see like a tug of war between the market strategist calls and the economist calls at big banks?
Yes, there's always if you think there's tension between the Fed and markets, there's a lot of tension on any trading floor between the house view, the economists, and what the desk traders in rates are saying and doing. That's always been the way. And I can remember back in 2007, this was very evident. You had some people really pushing. I remember actually sitting down with PIMCO in the summer of 2007, and one of their leading managers said to me, there is a housing bubble, it's blowing up. We've gone out to all the sand states and we're seeing it. We are fully positioned for a big recession. And the economists at the time are saying there's nothing to worry here. And of course, the S&P hit a record high on October 31st, 2007. We all know what happens. So this is why the bond market has this sort of feel. And it's why economists obviously look to their models. They're trying to sort of gauge where things are. And I think the real difference is that, in a way, the dot plot is a bit of a problem because it's a very static point, whereas the bond market, it's rolling this distribution of probabilities. And that moves on every little piece of data that comes in. And it gets amplified by things when the yen carry trade suddenly hits the skids. And then everyone says, oh, I've got to buy bonds because equities are getting hit now. And bonds are a good defensive thing to own. The only thing I will say, too, here is that we had a poor auction for 10 years this week and for 30s. Mm-hmm. But this 10-year is holding in around 4%, just a little bit below 4%. 4%, if you go back to looking at the charts since 2007, 4% is a really good level. Right? If you're a long-term investor and you think, should I sort of have some bonds here to offset my equity portfolio? And on the other question, of course, one really interesting thing that's come out this week is that if you look at the 10-year inflation-adjusted yield, known as a real yield, that's still hanging around 2%. And talking to an investor this morning, he said, this is the bond market telling the Fed they're too tight and they are at risk of a policy mistake. So keep an eye on that real yield, because I think that's going to be an important thing to watch over the next couple of weeks as we get some of this more important data.
Hey, Michael, we'd be remiss not to ask you, just got about 20, 30 seconds here. You did catch up with Dan Ivison. You mentioned it yesterday. Just your key takeaway from that conversation.
I think the key takeaway was you want to own bonds because it's going to get pretty rocky between here and now. We're getting towards the end of a late cycle dynamic. We don't know how things are going to unfold. And like a lot of other investors, he was long going into the last couple of weeks. He's lightened up. but he's ready to buy the dip if we get a big enough back up in rates.
All right, great stuff as always. Hey, listen, have a great weekend, I should say, and thanks for giving us a great week with all of your analysis. Bloomberg News rates reporter Michael McKenzie. All right, let's get to the equity trade. And despite kind of small moves in the equity trade, there is one name that really stands out, Matt, Sweet Green.
Yeah, absolutely. Soaring up 30%. And, you know, before this, for months and months, maybe years, this is a company that has been down. If you bought it at the IPO, you've been underwater for a long time.
It's a good point, right?
Yeah.
Like it's still trying to catch up there. Hey, listen, let's talk about it because the company did come out and post sales that outpaced market expectations. They raised their outlook for the full year. Let's get into it with Bloomberg News consumer reporter Dina Shanker joining us in New York out there in Westchester. So Dina, I mean, whoa. I mean, this was a pretty big quarter here.
Yeah, Sweet Green just doing really well, but they're not alone. The fast casual category has just been, winning when the QSR category has been losing. People really like salads for lunch and increasingly for dinner.
So why has the stock done so poorly? Is it just that they priced it too aggressively at the IPO? Because right now, even with these gains, they're only up 21% since that IPO, which was at the end of 2021. Meanwhile, Kava, which IPO'd much more recently, has quadrupled since it started trading.
Yeah, I mean, listen, Sweet Green has one really big problem, which is that they're not profitable at the moment. So that might be playing a role here as well. But they see a bright future, not just because people keep coming into their stores even when they're skipping other restaurant options, but also they are really bullish on automation being a big driver for them for serving more people at lower costs.
How could you not be profitable when you're charging $17 for a salad?
Something you have written about.
Yeah, well, food costs more than it used to, and the truth is that all that labor that it takes to make those salads is also increasingly in short supply and getting more expensive. But that gap between what a salad at Sweet Green costs and a combo meal at a fast food restaurant that isn't on one of their $5 meals, like that gap is getting really small. And so you're seeing a lot of people just think about the price in a different way. And just sort of bigger picture, I think consumers today value their health more than they did 10, 15, 20 years ago. So spending a lot of money on lunch doesn't seem so crazy. And also dinner is an increasingly important day part for all these fast casual restaurant chains. $17 sounds like a lot maybe for lunch, but does it for dinner? What if it comes with steak, which they've added to their menu? So Sweet Green has found, a loyal customer base, and $17 for a great salad with the added convenience that you can eat it alone at your desk. Maybe that really helps.
The added convenience that you could eat it sad and lonely at your desk. What a benefit. I actually do it. I don't mind
doing that.
I do it every day.
I
have to say, I do it every day.
I gotta say, I love their kale Caesars. What were you gonna say?
I was gonna say there's something, intimate about sitting alone at your computer eating your salad, and then when somebody bothers you and they're like, and it's like, excuse me,
Get out of my space.
This is my lunch 15 minutes. We used to have a lunch hour, but now you get that 15 minutes and you have a really delicious salad that doesn't make you tired and sluggish for the rest of the afternoon.
Quick question, Dina, on Potbelly. I don't know how closely you follow the company, but we talked with the CEO earlier. Their chart looks the opposite to Sweet Green. Sweet Green is like convex and Potbelly is concave. It's gone up and then come back down. So what's the story with the sandwich shop?
I just got about 30 seconds.
What I would just say is that consumers and investors are fickle, and it is really difficult to figure out exactly what's going on with any of these. But Potbelly plays outside that QSR market, but they're not quite in that salad chain either, clearly. So it's just every chain has a different arc. Or concave or convex.
They're not always apples to apples, I will say. But it was interesting, I feel like, from all of the two CEOs that we talked to, Car Guru and Potbelly, consumers are definitely looking for some value. Dina Shanker, so appreciate it. Consumer reporter at Bloomberg News. Coming up, we're going to talk about swing states and their economies in the election.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. The top names in business are on Bloomberg.
Middle market line draws are basically still about 5 percentage points below where it was pre-pandemic, which means as cost of borrowing went up, people aren't being quite as aggressive, and that's why the economy is slowing down. They're not hiring quite as many people. They're not buying that piece of equipment. They're not doing it because they're a little worried about final demand, and therefore they're being careful, which is unpleasant for your bank, but is okay because the companies are still making profitable and the credit quality is good.
Nobody covers business like Bloomberg. The top names in tech are on Bloomberg.
AI tools can help democratize storytelling and turn everybody into a creator. Our vision of the future is individual creators will look like Disney. They'll be able to go from an idea to a final story. They'll be able to publish that. They'll be able to merchandise it. They'll be able to do it across the franchises and stories they create.
Nobody covers technology like Bloomberg. Context changes everything.
Good morning from our world headquarters in New York. I'm Menace Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got a choppy session. Stocks do remain higher. The S&P up by 15 right now, back at 53.35. We're well off session highs, but still looking at a gain of 0.3%. Dow Industrials trading lower by 8 points. Little change there in the red. NASDAQ is higher by 58 points for the NASDAQ Composite Index, a gain now of just about 0.4%. 10-year yield, 3.94%, with a 2-year that's now yielding 4.05%. Gold, a little changed, up 79 cents the ounce to $24.28, while West Texas Intermediate crude oil is up 0.8%, $76.79 per barrel of WTI. Sweetgreen shares are surging after the salad chain posted sales that outpaced market expectations. It also did raise its outlook for the full year. Sweetgreen right now trading higher by just about 29%. Again, recapping, S&P 500 index up 17, up by about 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Matt Miller helps if I turn on
Push the blue button.
Push the blue button. You know, it's been quite a week, and sometimes you forget to push the blue button. Hey, for all the turbulence that has shaken the U.S. presidential contest this summer, voters have been consistent in saying the economy is their top election issue. But the economy that matters most is not national. This is important. It's in the 7 swing states poised to decide the race. We talk about the swing states a lot, Matt.
But we don't talk about this a lot. To me, this was pretty much new information.
It explains kind of so much.
And the way that these guys broke it down, I think, was unbelievably helpful. Like, they should work for the campaign.
Hint, hint. All right. This is today's Bloomberg Big Take, which is a story that our editorial team has deemed a must-read. It is among our most read stories on the Bloomberg. It's by a handful of reporters, including Bloomberg News senior economics writer Sean Donnan in our Washington, D.C. bureau. And then right here in our studio, we've got Stuart Paul, economics U.S. economist. Great to have you here with us. Both, as Matt said, a great story. Makes, I think, a lot makes sense in terms of the concerns among U.S. voters. Sean laid out for us what you guys set out to do and how you did it.
Yeah, look, our goal here was understanding, what was happening in the economy in swing states. As you said there, poll after poll shows voters nominating the economy as their top issue. We also know that voters in the 7 swing states are the ones that are really going to decide this election in November in all likelihood. And so we wanted to know the economy that they lived in. And what we found was some pretty, to me, was surprising new information. The first of which was just, we think of these 7 swing states as a kind of disparate family. Sometimes they're thought of being at the fringe of American politics or the American economy. But when you put them all together, it's 61 million people who live in a $4.4 trillion economy that would be the world's 4th largest and is up there with Germany and Japan in terms of scale. The second thing that we found that is also really important to think about is that economy is one that's been growing more slowly out of the pandemic recession than the rest of the United States. In fact, it grew at 2/3 the rate of the rest of the U.S.
Yep. Yeah. To me, the headline is, if you look at the economies in the swing states, the results are no bueno for the Democrats. Just because, Harris is going to pick up Biden's legacy, and these states have not only grown at a slower pace than the rest of America, but if you break it down by counties, most of the people live in counties that have done worse than even the state. Like, I look at Erie, which you headline or you point out in the story has seen a GDP per capita drop between 2019 and 2022, and everybody's just like moving out of there. But if you look at the counties across Pennsylvania, 40% of the people live in counties where GDP has fallen. So, Stuart, it's going to be hard for Harris and for the Dems to spin this.
It is. So much of politics is local, so much of investment is local, so much of infrastructure spending is local. And when you look even at the places where there's been a lot of investment in manufacturing, some of the stories are so unique and specific. So one of the major swing states where we've seen growth in manufacturing is Nevada. But a lot of that is really just a very specific story about manufacturing of Tesla's batteries. And so how much that resonates with voters who are experiencing a dramatic surge in the cost of housing, for example, and Sean has done some amazing reporting around the cost of housing, it's difficult to see those sort of economic developments resonating positively with voters, at least as it pertains to Harris on the ticket.
I got to say, Sean, one of the stats, and when you talk about Nevada, this particular county said, you guys include this stat, in 2019, a typical household in Nevada could expect to spend almost 20% of its income on mortgage payments if they purchased a median-priced home. That rose to almost 37% last year, according to calculations by Bloomberg Economics. I mean, how do you survive? How do you
Welcome
live?
to New York, Nevada.
Well, right, yeah. But I mean, this is a story we keep telling over and over here at Bloomberg.
Yeah, no, absolutely. And housing costs are, we talk about inflation a lot and the impact on consumers, but housing costs, which are related to interest rates as well as the value of properties, starter homes now are going for just, an incredible multiple of what they used to. And that is true in a place like Nevada. I mean, Reno, Nevada, where I was, was one of these places that is a kind of hopeful story about new manufacturing and economic transformation. And the local economy there in Washoe County, where it sits, has been growing in population. A lot of people moving there from California and so on. But housing prices have gone through the roof, and that has started to dislocate a lot of people there locally. So, I spent some time at Catholic Charities talking to the folks who work there and work with people who are struggling to make rent. And one of the things she says is what they're seeing is not just, people who are homeless. What they're seeing people who have good jobs and well-paid jobs, $25 an hour jobs, who can't afford to make rent because rents have been going up so much.
So the Nevada story is one of inflation that they're going to blame on Biden. Erie County is one on an exodus of manufacturing that they're going to blame on Biden. You get to Fuller County. I thought this was fascinating. In Georgia, they've seen per capita GDP increase 16% from 19 to 22. Population's up 14%, but they hate Democrats so much that they pretend the economy sucks. Like, how do you explain that away, Stuart?
It's difficult. So when you have a surge in population, you try to get those folks integrated into the economy as quickly as possible so that they can be productive, they can generate a lot of economic growth. But when the nominal growth that you've seen is about the same as the population growth that you've seen, you don't realize any improvement in your standard of living at all. And that's basically the story of what's going on. And frankly, it's a sad story. You want people to get integrated into the economy. You want standards of living to improve. And they're just not going to be feeling it, despite the fact that they've seen this influx of people that should help to buoy growth.
I want to go back to you, Sean, in a moment, but Sean is a master at doing these kinds of stories, taking us, to the granular level, the ground level, in terms of telling us what's going on across the United States, really getting to real stories. Stuart, working on this story with the team and with Sean, as an economist, we often talk, government numbers, big numbers, and so on and so forth. What did you kind of find out?
What really gets interesting is when you do the head-to-head comparisons for Trump and Biden so far in this administration. Vice President Harris is going to be painted with the same brush as President Biden, especially if she wants to take credit for any sort of the employment growth and the low unemployment, generally low unemployment, that they've seen during this administration. It's really a story of the cumulative inflation and comparing cumulative inflation across the swing states, across the presidencies. If you look, there's only one swing state that's had lower inflation than the U.S. as a whole. 6 of the 7 swing states have seen the same or more inflation than the rest of the country. And to look at Wisconsin, where they've had lower inflation than the rest of the country, it's really a story of an economy that's in decline at the state level more broadly. You look at the rest of the swing states, Arizona, Nevada, where they've seen dramatic inflation, and that's way worse than the rest of the country, you would imagine that that's going to be a problem for Vice President Harris. And if you just zoom out to the national level and you think cumulative inflation under Biden is going to end up being about 22% during his 4-year term in office, people are going to remember that during Trump's time in office, there was just cumulative inflation of about 8%. And that's the thing that matters most. It's literally a pocketbook issue. How much is the money in your pocketbook going to buy you?
So they think they would be better off with Trump because you didn't have the sort of post-COVID inflation during his presidency. Sean, what can the Harris
NYMEX WTI crude September future settled at $76.84 a barrel, which is up 65 cents or 0.85% on the session.
So one of the really fascinating
Natural gas
things, in
September
particular
futures
this
settle at
week, as Vice
$2.14.
President Harris has
Gasoline
also been
September
touring the
futures
swing states, is to
$2.39.
listen how
Diesel
the
September
economic
futures
message has
$2.34.
changed, right? She is much more about what is happening to households and promising a better future. She's promising to bring down prices. She's talking about corporate price gouging. Those are her words. She is trying to offer hope for the future. Whereas when President Biden was touring and campaigning, the message you heard was much more about, look, the American economy is the envy of the world. Has had an incredible recovery from the pandemic recession. You know, I hear this all the time when I go to the G7 and so on. And that was a message that just did not resonate with voters. And we saw it in poll after poll. And so we're seeing the Democrats adjust on the fly. But, you know, look, the broad point here is also that there is a disparity between what economists and markets look at, and those are the big national numbers in terms of the economy, and the local numbers. And it's the local numbers that matter in politics and continue to matter. We learned that in 2016, both here in the U.S., when we saw the election of Donald Trump and people started talking about those left behind places in America. We saw it in the U.K. when we saw Brexit in 2016.
Right.
We got to remember that lesson here in 2024.
Really important. Explains so much, certainly in terms of some of the voter dissatisfaction that's out there. Hey guys, thank you. Incredible read. Bloomberg News senior economics writer Sean Donnan, Stuart Paul, Bloomberg Economics U.S. economist. Check out and you can read more of the Bloomberg Big Take. It's on the Bloomberg terminal and at bloomberg.com/Big Take. All right, let's stay in D.C. where Sean is and get back to World and National News and Amy Morris. Amy, all yours.
Thank you, Carol. Russia declared a federal-level emergency in the Kursk region after a large-scale incursion from Ukraine. It sent reinforcements there today, 4 days after hundreds of Ukrainian troops poured across the border in what appeared to be Kyiv's biggest attack on Russian soil since the war began. Deputy Pentagon Press Secretary Sabrina Singh.
They are taking actions to protect themselves from attacks that are coming from a region that are within the U.S. policy of where they can operate our weapons, our systems, our capabilities. I'd refer you to the Ukrainians to speak to their own operations.
Ukraine said it carried out a drone strike on a military airfield in Russia's western region. Vice President Kamala Harris and President Biden will make their first trip together since the president's decision to drop out of the presidential race. Biden will appear alongside Harris at an event in Maryland next week, August 15th. The White House says they'll be talking about progress making to lower costs for the American people. Summer Games in Paris will be wrapping up this weekend. The U.S. right now leading with the number of medals at 105. China has 77, France has 55. China has the most gold medals with 32. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris and this is Bloomberg.
The more that you learn about this case, the more it reads like a Hollywood script. The nature of the killings, the execution, the just brutality of it.
It wasn't in the psyche of people that they could be looted because they are considered so sacred.
And we did it the way you do every single investigation. How do you eat an elephant? One bite at a time.
It jumped off the page at me that you could see that there was a Ponzi scheme taking place.
I started hearing mafia, mafia, mafia.
Il sistema è perfetto. Sono gli uomini che spesso non lo sono.
These are the holders of truth and justice. They cannot be possibly be doing this. But then they are. They are. And the evidence is there. It's overwhelming.
What's happening on Wall Street?
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
What are your thoughts on fast fashion? It's been transformative. It gives the masses access to fashion, but there's a cost to it, downside to it.
My first notice is too much waste. I think this is also how I grew up, making your own clothes and making something that's well special and well unique. It's like timeless. And now you see that everybody is looking the same, like wear sweatshirts and wear t-shirts. And for me, it's just like when they wear something that's special, they feel empowered.
Is there a need for fashion to be more mindful of the impact it's having socially, environmentally?
Definitely.
Is it happening enough?
I think it's happening. It's gradually happening. All the designers are doing. Everybody is thinking about this subject at this moment, thinking how to be more sustainable, how to be more environmental friendly.
Do you think the fashion industry is doing enough, to ensure that it is sustainable? There's so many targets out there. Are they even realistic in wanting to achieve them?
I think some of them are just like they're using sustainable ideas as a marketing concept only. They're actually not really doing it. I think as a designer, it's really important to really make it happen. Every collection, I think about how to do it and how to tell the customers. I think that is our responsibility to educate our customers.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure. Don't miss Bloomberg's interview with the
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
If I had invested with you, which I wish I had, what kind of rate of return would I have had over that 10-year period of time?
Over 100% a year on average. On average.
100% a year, that's pretty unusual.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. The S&P 500 index is advancing. The S&P set for its best two-day run in 2024. We are seeing a late week comeback for stocks. Right now, we have got the S&P 500 index climbing by 19 points, up by about 0.4%. The Dow, however, swinging between gains and losses, back in the red. Little change, down 3 points, while NASDAQ is higher by 71 for the NASDAQ Composite Index, up now by about 0.4%. 10-year at 3.94%, with a 2-year yielding 4.05%. Gold up $1 the ounce to $24.28. Little change there. And West Texas Intermediate crude oil up 0.6%, 76.63 for a barrel of WTI. Bitcoin building on yesterday's surge. Bitcoin up another 1.2% right now at 60,230. Massachusetts Senator Elizabeth Warren is asking Tesla's board to investigate whether CEO Elon Musk is using the electric vehicle's resources to benefit other companies that he owns and runs. Tesla shares today, they're up by 0.7%. Recapping, stocks are trading mixed. S&P up 19, up by about 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we talked about this a lot during Open Interest this morning on Bloomberg Television about shares of TSMC. They were out of the gate, they were up about 1%, up 2% at their highs, but it did seem like their pre-market, they were going to rally even more.
Right, and that's because their revenue in July was up, 45%?
45%, yeah,
so,
exactly.
They were doing well, and this is a foundry that's key to the AI arms race, right? Because not everybody realizes NVIDIA doesn't make its own chips.
No.
They send the plans to Taiwan Semiconductor, and Taiwan Semiconductor makes those chips.
Right, they're a contract chip maker, correct?
Yeah.
All right, so let's get to it, and I am curious, though, what Ian King has to say about what we did get from TSMC overnight. Ian, of course, Bloomberg News U.S. Semiconductor and Networking reporter, back with us in our San Francisco bureau. Hey, Ian, good to wrap up the week with you. What we got from TSMC, it looked like pretty tremendous growth. What does it tell us about the outlook? And I always think about, so if it's good for TSMC, does it mean everybody or a lot of the semi space is doing okay?
Yeah, I mean, the monthly reports are obviously a fairly general number. We don't get the drill down that would give us more insight. I think the way it's been taken, though, there are a couple of things to point out. As Matt said, 45%, that's not bad. But up from last year, where things were relatively weak, particularly the smartphone market, and you've got to remember that Qualcomm and Apple are really big customers of TSMC. But the other way to look at it is, I think you've pointed to, which is everybody is very nervous about this massive spend that we've seen on AI infrastructure. Will the big spenders keep going, and will the beneficiaries, notably NVIDIA, continue to keep benefiting? And this number would appear to be a positive sign for that particular concern.
I wondered when I was looking at this and thinking about it, you focus on this all the time, but for me it's just cursory every, like 10 minutes every hour. They make all of their chips in Taiwan. Like if something bad were to happen between China and Taiwan, would the world be stuck with no more semiconductor production?
So you're right, all roads lead to Hsinchu. This company is tremendously important and now accounts for a large percentage of the world's most advanced semiconductors are produced in a couple of sites it has in Taiwan, but it also has a plant that it's bringing up in Japan. It also has one that it's building near Phoenix. So there is an effort to diversify, that supply chain. Also Samsung, the South Korean manufacturer, it's kind of nearest rival. So that has advanced capacity in South Korea, and they're also building, another plant near Austin, Texas. And then Intel is trying to get back in the game. So it would be a disaster. It would have significant consequences on the world economy, but there are efforts to diversify that risk.
I spoke with bankers, Carol and I both, with bankers from Ohio yesterday, and Intel is investing, planning to invest tens of billions of dollars to build a factory there, but they have been teetering lately. In fact, Intel, I think the second biggest loser on the S&P today. Is it set in stone, or is it possible that they may not be able to go forward with all of their foundry building plans?
I mean, our colleague Mackenzie Hawkins did a kind of a good roundup of the CHIPS Act funding efforts so far. And, the key part of this, and I think the thing that we should all pay attention to, and particularly as taxpayers in the US, is the way this has been structured is you don't get money unless you actually do what you said you're going to do. So yeah, you can throw up a building and we'll give you a certain amount of support for that. But at the same time, if you don't put the much more important equipment in that building and actually start sort of producing chips, then you don't get the rest of that money. So government support is contingent upon a knowledge of the way that the chip industry has always worked, which is, hey, we'll build these shells and we'll hope that we get the demand, but then we'll only really put the expensive equipment in there if we're absolutely sure that we need to go ahead with expanding capacity.
I just wanted to ask because last night after you and I left this studio, Moody's downgraded Intel's senior unsecured debt rating to BBB from AAA, and Moody's said the downgrading reflects our expectations of Intel's significantly weaker profit over the next 12 to 18 months, resulting from a combination of higher costs related to product manufacturing, process technology transitions, unfavorable product mix, weaker than expected demand in nearly all of its product segments, and continued market share losses.
It's not good. Well, and I feel like, Ian, come on in on this, because I also feel like when they were, came out, they talked about in their press release, which it struck us all weird, where they were talking, I felt like, was it liquidity and cash flow, concerns? It just isn't something you expect from an Intel.
I mean, this time a week ago, we were kind of bracing for impact, and that impact landed, and it landed more heavily than I think even the most pessimistic people out there. Some analysts like Stacey Rasgon from Bernstein said, look, if Intel wasn't getting government money, if it wasn't getting outside financing, this would be a going concern consideration. And this is absolutely astounding for a company of this nature.
Unbelievable.
Doesn't it, like, you think about how, you've covered this space a long time. Like, to be talking about that is pretty wild, right?
I mean, I was looking at the numbers before I came here to talk to you guys. It's going to be less than half the size of NVIDIA in terms of revenue. AMD, a company that struggled to even get on the map for years, is now up to over 50% of Intel's revenue. So that top line, that really important amount of money that was flowing in, that fired up all of this R&D, all of this building of new plants, it's just nowhere near where it used to be. Profitability has gone away. The cash flow is obviously struggling. They're not paying a dividend anymore. I mean, all of these things are not good signs. Their answer to this is like, look, we're taking the pain up front. We're investing heavily. We're paying for the mistakes of the past. But don't worry, we're on the way back. I think what the market wants to see now is evidence that points to that being absolutely the case. They want to see a bottom. They want to see a turning point. We don't really have any numbers that would indicate that that's the case at this particular moment.
Just so we don't end on such a dour note, I woke this morning to read Carnegie's story. NVIDIA has lost almost $1 trillion of market cap in the last couple of weeks, which is nuts. But
still up 112% this year.
Well, that is true.
Saying.
And I was also going to say, like, there's still a ton of investment in AI. Like, the story hasn't changed because the Bank of Japan raised rates and the non-farm payrolls number came in low, right?
Absolutely not. We have had no evidence from this earnings season in particular that there's any slowing in the sort of wild rush to put all of this infrastructure in place. And obviously, NVIDIA is the main beneficiary of that. So we'll find out later this month what NVIDIA has to say themselves. But at the moment, there's no reason to be concerned about the fundamentals. The valuation of NVIDIA, that's another story, right? That's up to investors to put the appropriate value on it. But the fundamentals at this point appear to be solid.
Pretty wild space, though. Ian, thank you so much. Really super, and always appreciate what he has to say. Ian King, he is U.S. Semiconductor Networking reporter. Ian, have a great weekend, of course, here at Bloomberg News, out there in our San Francisco bureau. It is kind of fascinating,
It is.
right?
I mean, there are times. I started out as a cub reporter like 25 years ago covering Infineon in Munich, and I thought, what a boring space this is.
Not boring at all.
And it is not boring at all.
All right, coming up, everybody. Flights, hotels, and parks all flashing travel warning signs. Why is Expedia up then?
Arch has laid plenty of groundwork for future revenue, but for now, Mark Messler's most pressing challenge as CFO is conserving capital.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, and but we also have to be nimble around that as well because things change by the day.
Archer went public in 2021 in a reverse merger with a SPAC, Ken Moelis's Atlas Crest Investments. Through August 2023, the company raised over $1 billion from investors including Stellantis, Boeing, United Airlines, and Cathie Wood's ARK Investment Management.
Does that ARK investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything. Now, your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stellantis, the owner of the Jeep and Ram brands, plans to eliminate as many as 2,450 hourly positions at a pickup truck factory located near Detroit, Warren, Michigan. Right now, Stellantis shares, they are trading lower. We got Stellantis down by just about 1.4%. Cisco cutting thousands of jobs in a second round of layoffs this year. This according to Reuters, which does cite sources. Cisco shares now down by 0.4%. Reuters says the number of people affected could be similar to or slightly higher than the 4,000 employees that Cisco laid off in February. Those cuts, according to Reuters, are likely to be announced as early as Wednesday. Again, Cisco trading lower today, down by 0.4%. Taiwan Semiconductor Manufacturing's revenue rose 45% in July, accelerating its pace of growth from the June quarter and bolstering hopes for sustained strong demand for artificial intelligence chips from the likes of NVIDIA. Right now, we've got shares of Taiwan Semi up by 1.2%. NVIDIA lower today by 0.2%. What a move in shares of Sweet Green today. The salad chain, they are surging after it posted sales that outpaced market expectations. It also raised its outlook for the full year. The stock has already more than doubled in value this year through yesterday's close versus a 2.8% gain for the Russell 2000 index. Shares of Sweet Green, they are surging today. We've got Sweet Green right now up by 30.1%. And Expedia posted better than expected second quarter results. Expedia shares today, we are looking at Expedia up by 9%. Those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, we're going to get back to Bloomberg Business Week in just a moment. Carol Master along with Matt Miller in for Tim Stenevec. Right now, though, back to D.C. we go and a check on world and national news. Let's head on over to Amy Morris. Amy.
All right, thanks, Carol. Russia declaring a federal-level emergency in Kursk following a large-scale incursion from Ukraine, sending out reinforcements today, 4 days after hundreds of Ukrainian troops poured across the border in what appeared to be Kyiv's biggest attack on Russian soil since the war started. Deputy Pentagon Press Secretary Sabrina Singh.
We are supportive of Ukraine and their success on the battlefield. But as the dynamics have shifted on the battlefield, they've been able to actually push the Russians back further into Russian territory. But as they see attacks coming across the border, they have to be able to have the capabilities to respond.
Ukraine said it carried out a drone strike on a military airfield in Russia's western region, expanding the reach of its assaults on Russian territory for a fourth day. Tropical Depression Debbie is on track to hit the Northeast, including the New York tri-state area. Debbie was downgraded from a tropical storm this morning. More than 40 million people are under flood alerts from South Carolina to Vermont. More than 26 million people are under a tornado watch from Virginia to Delaware. The death toll from Debbie is now up to 7. Summer Games in Paris are going to wrap up this weekend. Right now, the U.S. leads with the number of medals at 105. China has 77 and France has 55. China has the most gold medals with 32. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris. Back to Bloomberg Business Week with Carol Masser and Matt Miller.
Thank you so much, Amy Morris, there in our D.C. bureau. We want to get to a story that actually just popped up among the most read. I think it is the most read on the Bloomberg in the past 60 minutes.
Depends how you sort, right?
I know.
I default to 8 hours, but you're looking at 1 hour.
I like to go back and forth here, but it's the second most read in the past 60 minutes and has to do with something we've been talking a lot about, is what's going on with the consumer and travel.
Yeah, all of the earnings that we've seen coming in from companies like TripAdvisor, like Airbnb, like Disney in terms of their parks, point to a consumer that is just pulling back from bookings. I mean, it's not a surprise because after the pandemic, you had the revenge travel, and a lot of people really jumped back into it. So there's going to be, a reversion to the mean after that. But
so this is what I've been thinking about. Again, we're still kind of righting the ship post-pandemic. So is this just more normal? And obviously the surge and the revenge travel was abnormal.
I would say so. But, as Ian pointed out, it's one thing to look at the fundamentals, and then it's another thing to price the companies. So many of these companies were punished.
Yeah.
We saw, for example, Airbnb get spanked.
Right.
But Expedia...
What is up with that?
It's up 10% today.
I know.
And I looked back to see, if you look at a stock, XPEE, I think is the ticker, right? If you look at a stock and you do HCP space W,
right,
you can see how it's done for the week. Because I thought, okay, maybe Expedia got spanked on, Wednesday or Thursday, but it didn't. It's done well all week. It's up 12% week to date.
Right. So it's interesting, right?
It was down 7% last week, but that follows a 10% gain the previous 2 weeks.
And
so
Expedia's
done pretty well.
About soft demand as well. It did do post an earnings beat, but nonetheless, soft demand. What was it we were talking earlier about, looking for, is it Airbnb that they're trying to diversify in terms of look for other avenues of growth?
Other kinds of businesses.
So that's,
and a company like TripAdvisor does have diversification, right? You don't just buy planes there. You don't plane tickets. You can't buy planes on TripAdvisor. You don't just get hotel rooms. Yet. You don't just rent cars. It's any of those things.
Right.
So if one of them is, ebbing, the others can flow. The problem with an Airbnb is they don't have that diversification.
All right, don't go anywhere. We're not going to go anywhere.
Here.
Although, if you're watching on TV, the close is coming your way in just a moment. Matt and I are going to continue on Bloomberg Business Week. We're talking a little bit more about the markets and also, just stick around, you'll find out.
The countdown is on. Everything you need to get the edge at the end of the market day. This is the close.
A drama-filled week for investors comes to a relatively undramatic end. From Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick.
I'm Alex Steele. Sleepy Friday. Sleepy Friday?
Well, it doesn't have to be like an F. You need like
I know.
Freaky Friday.
I don't know. I don't have it.
Flip-flop Friday.
Are we flip-flopping? That's the point. This is just a board of showing you know what? Everything's okay. Everything's calm, at least now, into Friday. Volume is also really, really light here with the S&P up by about 0.4% off the highs of the session nonetheless. VIX calming down, money flowing back into the 10-year, so no more spike in rates, no more sell-off in equities, and no more spike in the VIX. Does it last, Romaine?
Yeah, well, that's the big question here. We call it that gradual return to calm in what is still going to go down as the most volatile stretch of equity and bond market sessions of the year. But despite the extreme moves, the S&P is poised to end the week actually right around where it started, believe it or not. And Bank of America's Michael Hartnett, he says the turbulence didn't quite reach proportions that reflect expectations for a hard economic landing. Now, that sentiment actually dovetails with comments that we got out of Kansas City Fed President Jeffrey Schmidt, who signaled he's not ready to support a cut in interest rates given what he sees as a still healthy labor market. Swap traders also further trim bets on aggressive Fed easing, and 4/5 of economists surveyed by Bloomberg predict that the Fed's first rate cut in 4 years will be a modest quarter-point move. David Miracle, the chief U.S. economist over at Goldman, is just fine with that.
They ought to be, and I think they will, erring on the side of caution if we do get additional negative data. I'm not really concerned at all about inflation staying too high.
Now, economic perceptions could be challenged next week when we get another read on the consumer with earnings from Walmart and Home Depot, among others. Remember, investors and economists alike were rattled this week by warnings out of companies like Disney of slower business at its theme parks, a warning by Airbnb that bookings growth is decelerating, a warning from Capri that its apparel brands are struggling with shrinking margins. And we also got soft guidance, believe it or not, out of makeup company Elf Beauty. I mean, if makeup can be touched, then what nothing's safe.
This goes against everything I believe in. Invest in your face. This totally shocked me. All right, listen, if you were on vacation from last Thursday at 3 p.m. till now, you know what? You didn't really miss much. Yes, we are down for 4 straight weeks in a row on the S&P. We haven't seen that since September of 2023. But just look at how we are almost back to neutral, despite the tumultuous weeks that we've seen up until then. So basically, rewind a month and you're kind of good to go, Romaine. I think the question is this a response to technical selling, so sort of leverage unwind, the carry trade, etc., or is this a fundamental economic growth scare? Because that will depend on what kind of positions you wind up taking as we go forward.
Absolutely. As we kick you off to the close, let's bring Lisa Shallot into the conversation, CIO over at Morgan Stanley Wealth Management. And that is a question that I think you kind of have to parse, Lisa, when you look back, not just this week, but of course what happened last week here. Was that really fundamentally driven, or was it something a bit more technical? Sorry, I think we're having some audio issues with Lisa right now. We'll try to get Lisa's connection sorted out here. But Alex, when we talk about this crazy week, and you saw gold basically come close to reclaiming its record high, you saw one of the biggest point gains in the VIX that we've had since the existence of the VIX. And I think we have Lisa's audio issues fixed now. Thanks for being patient with us, Lisa. And we talk about all these extremes, all these superlatives that we've seen over these last 5, 6, 7 sessions here. What do you think was really driving that?
So, we've been in the camp that a lot of this was a technical unwind of, some speculator trades, whether we talk about, the yen carry trade, or we talk about a short volatility trade. I know this sounds like a lot of jargon for a lot of your audience, and it certainly does for a lot of our clients. But the reality is that while some of the macroeconomic data certainly did come in a little bit weaker than folks hoped, certainly in the labor market and for some of the manufacturing data, the reality is the U.S. economy is slowing, but nowhere near recession. And earnings, by and large, are coming in okay. Consistent with a soft landing. And that's what we need to continue to focus on, is that a soft landing is just that. It is a landing. It is a material slowdown from what had been a very, very strong expansion phase. We're going to avoid recession, avoid negative growth, but we're going to be below average growth. And just the path to getting there is bumpy.
Well, I hope Jay Powell is watching this, Lisa, because right now the drumbeat coming out of the markets, and even from some of the other Fed members, that you need to cut big, and you need to do it sooner rather than later. Here, I mean, if we are seeing effectively what is kind of the makings of a soft landing, what do you think the monetary response needs to be, if there needs to be one at all, at this moment?
We're in the camp that says the Fed has been appropriately measured. They've been appropriately data-driven. As I said, the data is mixed. We got good data on services. And I think that the Fed is going to proceed with caution. They've given forward guidance. They're going to start in September. It's probably going to be 25 basis points. And that is the right thing against a backdrop where we're coming out of a second quarter where United States GDP growth on a real basis was 2.8%, which is quite healthy.
So, Lisa, Romaine was talking about gold. Where do you go for safety when things are bumpy?
We like gold a lot, and we also like other real assets. So we include, in addition to gold, right now we're buying things like energy infrastructure assets. We're buying residential real estate linked assets like the residential REITs. Those are all areas that we think are relatively safe. And our favorite place to be at this point is investment grade credit. We are in the sweet spot for investment grade credit, where you're not too hot, you're not too cold, you're able to clip coupons with corporate cash flows remaining very robust.
Lisa, it's interesting you bring that up, because this week we saw record issuance in investment grade. We didn't have a blowout spread situation that would have implied a VIX at, say, 60 or 65. Do you think that is yet to come or not?
We are in the camp that there's still a lot more volatility that is probably going to play out this summer. There's just too many unknowns. There had been way too much complacency in this market. And so our best guess is that while volumes are low now, as people come back from vacation, there are still portfolios that are out of position that will continue to unwind as we get into the post-Labor Day fall period.
All right, well, there were a lot of catalysts this week that moved the market, including the macro, but also a lot of concerns about tech. We want to continue that conversation in just a second, but we need to take a break. Lisa's still sticking with us, CIO at Morgan Stanley Wealth Management. We'll be back in a moment. This is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stradwatts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Shares of Cisco are down by about 0.4%, reportedly cutting 4,000 more jobs in a second round of layoffs this year. That's according to a report from Reuters, in order to double down on its faster-growing businesses like cybersecurity and AI. Woo Jin Ho over at Bloomberg Intelligence joins us now. Woo Jin Ho, you knew that they hadn't cut enough back when they announced it in February. Is this enough? Will they do enough with these cuts?
Yeah, Alex, when they cut last time at around 5%, I almost felt like they were trying to do a wait and see in terms of where the recovery is going to go. That recovery really never materializes, or didn't materialize as strongly as they had hoped. And I thought it was going to be another 5 to 10% on top of that. And the sense I'm getting right now is that this 5% should satisfy some investors, hopefully when they report next Wednesday.
What's the growth story, Woo Jin? Is there one?
That's a good one, Romaine. In terms of organic growth, look, they're going through a couple of going through a rough patch that's been lasting a little bit over 6 quarters now. They have another couple of quarters of weakness in terms of the organic growth, but the traditional networking business, look, it's a 0 to 5% grower longer term. But there is an attractive AI story. Keep in mind, they acquired Splunk a couple of quarters back, and that part of the business plus security should grow around mid-teens. Now, 2025, fiscal 2025 is a transition year in my mind. But if everything really comes into place, the growth story gets a little bit more attractive. But we're not talking about double-digit growth here anytime soon. We're talking about mid-single-digit growth at best for now.
Right, versus say other tech companies that are in the AI chip sector and forget about it. Woo Jin Ho, we appreciate it. Bloomberg Intelligence for joining us on that. Let's get more with Lisa Shallett, a CIO at Morgan Stanley Wealth Management. Lisa, Truist said, you know what? Time to buy tech. Excess has been wrung out. Investor expectations have reset lower. Let's buy tech. What do you think?
Well, I don't know that all the excess has been wrung out. That might be a little bit of an exaggeration, but certainly valuations are much closer to fair value and much closer, to 5-year medians. So what we're telling clients is, for those who are very, very underweight tech, who were waiting for an opportunity, this is an okay entry point. But certainly we would not be going overweight or chasing names here because they're really not that oversold. We've had a pullback. And one of the things that I think is important to note is that certainly with some of the semiconductor names, we're starting to be reminded that these great secular growth stories are exciting, but they are also exposed to global and cyclical factors. And so I think, the memory of 2022 and some of the tech earnings recession that we had then has faded quickly from people's memories. But I think, we're reminding investors that tech earnings can be very vulnerable to economic slowing, and there's a lot of operating leverage in some of their margins.
Well, when we talk about all the spend that we've seen out of the corporations, meaning like the hyperscalers and other folks who are buying the chips and other data servers and things needed to sort of power this sort of AI fever dream, if you will. When you looked at some of those reports, Lisa, did anything strike you as outsized in terms of the amount of spending, or did it seem like, at least based on the promise, that it was more, I guess, commensurate with what it takes to get there?
Look, this is a super hard question to answer. It's the supply versus the demand question. And look, the hyperscalers, I believe, to my ears, have been very, very clear that they want to spend ahead of demand assessments. They want to be there. They are not hyper concerned right now about the timing of return on investment. And those are the types of things typically that can lead to overbuilds and excess capacity down the road. So look, I don't think we're there this quarter or next quarter, but these are issues that are going to have to be confronted in the next year or two, and the conversation with the investment community has just begun.
Yeah, Lisa, because it's still a cyclical business. Like, it's still chips. It's still a cyclical business in a structural shift. If we see more carry trade unwind, how exposed do you think we'll be to another tech sell-off?
Quite. By our best guess, we're only about 60% through the carry trade unwind. Remember, a huge amount of capital has come out of Japan and flowed into U.S. equity markets, has flowed into U.S. Treasury markets. And so, as those dollars are both repatriated and short trades covered, there is vulnerability to the things that were most crowded. And that includes, some of the tech stocks and the ones that dominated, quite frankly, even the vanilla S&P 500 index.
Hey, we only have time for one last quick one here, Lisa, and I do want to get your thoughts here about the upcoming election and whether you expect to see a shift in the trade out there around that election. And by that, I essentially mean, are people going to move to the sidelines until they get clarity on it?
Well, I think our biggest fear with regard to the election is, less that we're going to have some outcome that necessitates policy changes. I think that always happens. I think our concern is that it drags on. We're going through a historic era where the belief in the sanctity of American elections is being questioned. And so what we don't want to have happen is, come out of November 5th with lots of uncertainty, lots of court cases, lots of litigation. Those are the types of things that if that scenario played out, rather than, whether we have a red or a blue win, is the one I think would be most damaging to the United States stock markets.
All right, Lisa, always wonderful insights, always a great conversation. Wishing you a great weekend. Lisa Shallett, CIO over at Morgan Stanley Wealth Management, kicking us off to the close here on this Friday afternoon. And it's weeks like this one where stocks for the long run takes on a whole different meaning. Jeremy Siegel, Professor Emeritus of Finance over at Wharton, going to be joining us later in the program.
Plus, shares of Elf Beauty taking a hit today, even after posting sales that topped even the most bullish Wall Street estimates. We're going to break down the moves in today's stock of the hour.
And some big moves in the real estate space. Billionaire buying spree, if you will. Larry Ellison buying a posh, well, what else would it be? Luxury hotel down in the same Palm Beach enclave where he dropped over $170 million on a residential compound 2 years ago. A lot to talk about. Stick with us. This is The Close on Bloomberg.
So a number of people, I think from Homeland Security and or the CIA or NSA, have gone to Capitol Hill and said that TikTok is a danger to our national security. But the public hasn't been given that much detailed information about what the threat is. How much of a threat to our national security is TikTok?
The People's Republic of China acts adversely to the interests of the United States in different ways. One of those ways is through the dissemination of disinformation, the intentional communication of false statements. And TikTok is an extraordinary avenue through which to disseminate disinformation to millions and millions of people.
All right, time now for our top calls. The big movers on the back of analyst recommendations. And we start off today with Five9. The cloud software company downgraded to neutral from outperform over at Baird. The analysts also slashing that price target to $40 from $90, with the expectation of reduced visibility and ongoing competitive threats to continue to be significant overhangs. Those shares down 27%, their worst day on record. Next up, let's take a look at Bumble, BTIG swiping left on Bumble, cutting its recommendation to neutral. Much like rival dating platform Match Group, the analyst says it's going to take a long time for Bumble to get its growth and sales back on track. He cut his 2025 revenue estimate by close to 20%. Nevertheless, Bumble bucking that trend, up about 3.5% on the day. And finally, let's take a look at Burlington Stores. An upgrade today to buy over at TD Cowen and a price target going up to $279. The analyst saying that the off-price retailer is making inroads on his strategy to drive operating margins. He also says the company's plans to open more stores as well as its supply chain advancements can bolster the sales outlook into next year and beyond. Burlington Stores relatively unchanged on the day, and those are some of our top calls. We do want to stay in the retail space because that could be a big driver of market activity next week. We're expected to get results out of big box players like Walmart and Home Depot. And the big question on everyone's mind is how have they navigated softer consumer trends? Joe Feldman joining us right now, Senior Managing Director and Assistant Director of Research at Telsey Advisory Group. He's got to outperform on Walmart and a market perform on Home Depot. Let's start off with Walmart here because this is always a stock that everyone says technically should be recession-proof. It appeals to a lot of different income levels, and when things get bad, a lot of us flock to Walmart. Are we going to see a repeat of that in the months and quarters ahead?
Yeah, I think we've been seeing that for a little while now, Romaine. You know, Walmart has performed quite well. They had a stellar first quarter. We think second quarter, when they report next week, is going to sound pretty good as well. And they're just so well positioned for this environment heading into the holiday season. You know, the consumer is looking to save money. They're considering ways to stretch their dollars between paychecks. And Walmart offers that for the consumer because they have great prices, the best prices really in the market on food and consumables. At the same time, the discretionary offering that they have is also value oriented. And I think they're really well positioned in this market.
When does their investments, say, in technology and also wage increases start to become more of a headwind for Walmart in terms of profitability?
You know, Walmart's been doing a lot of investment for a while now. They've even pulled forward some of the investment last year and then early this year. So we're starting to get to that point where that flywheel that Walmart always talks about, where it's a virtual cycle when you start to get better profitability, should start to come. I think the second half of this year, we're going to start to see some of it. 2025 should look even better because a lot of that investment, the heavy investment, has already started to happen. It's not to say that they're done. There's definitely going to be a lot more on the tech side and across the organization to leverage technology throughout the organization will be spent. But they're well positioned right now.
All right, let's turn to Home Depot because a totally different story over there, Joe. We're already sitting on something like 6 straight quarters of revenue declines, and at least based on the consensus estimates on the Bloomberg terminal, it's going to be a 7th straight quarter of declines. What are you expecting?
Yeah, we, like others, are looking for a decline this quarter as well. Certainly on the same-store sales side of things, I think the consensus around -2 right now. You know, it's been a long time since we've seen that positive trend. We've seen fits and starts. We feel like we're getting closer, but I think you really want to see the Fed cut interest rates for this one to work. The stock has performed better every time we've seen an inkling or some suggestion that the Fed is closer to cutting, which they are pretty close right now. So the stock will probably work ahead of how the fundamentals hold up, but others in the space have had pretty challenging second quarter with regard to fundamentals, and it's been a tough spring, I think, for some of the retailers in home improvement.
So, Joe, I know we're getting towards the rate cut then. If we get 25, even 50 or 75 this year, is that enough?
Well, I think it will help. It will certainly, it's a start. I think the investment community would like to see more than that over time, but that would help get the stocks going. When we've done analysis in the past, and any time the Fed has started to cut rates, you know, within 3 months, 6, 12 months out, the interest rate sensitive stocks within the consumer world have tended to perform quite well. So Home Depot, Lowe's, Floor & Decor, those types of stocks should do well. But again, there is a trickle, you know, a little bit of a lag or delay before the fundamentals where sales at the store really start to accelerate.
Yeah, so not quite there yet. Hey, Joe, we appreciate it. Thanks a lot. Joe Feldman over at Telsey Advisory Group. We appreciate that. Can we stay with consumer stuff for a second? We got shares of Sweetgreen, Expedia, and Honest Co. all moving a lot higher. So, okay, we're kind of not into maybe buying makeup, but we will definitely buy things like diapers, expensive salads, and vacations.
Yeah, I mean, yeah, kind of interesting to see. Of course, some of these stocks, or at least with Sweetgreen and Honest, maybe a little beaten down, so you get a rebound there. Kind of curious about the rebound rebound in Expedia. I guess because we were all talking about gloom and doom in travel, but I guess some people are piling back in. One that's not on the screen that I'm just going to mention here is that Intel shares down again. They were already down before the show started here. We're now learning that they've canceled this innovation event that they had scheduled for next month. Of course, that's on the heels of an earnings report that was no bueno.
No good. Mentioning the words liquidity and worried about that. That's pretty brutal for that company. All right, well, coming up, we are going to break down what to expect from the Fed. We get CPI next Wednesday. Remember, we were going to have an inter-meeting cut. Well, that seems to be off the table. So how do we manage and where do we go from here? We're going to break that down for you. This is The Close on Bloomberg.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
The top names in business are on Bloomberg.
Middle market line draws are basically still about 5 percentage points below where it was pre-pandemic, which means as cost of borrowing went up, people aren't being quite as aggressive, and that's why the economy is slowing down. They're not hiring quite as many people. They're not buying that piece of equipment. They're not doing it because they're a little worried about final demand, and therefore they're being careful, which is unpleasant for your bank, but is okay because the companies are still making profitable and the credit quality is good.
Nobody covers business like Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Just about 3:30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostick.
I'm Alex Steele. It is a really calm Friday considering the tumult that we've seen over the last week. Volume is really light as well. Stocks pretty much going nowhere. But this time last week, when I was talking to Scarlett, it was 50 basis point cut in September from Citi and JP Morgan. It was a risk of an intra-meeting cut, as JP Morgan was also pointing out.
Yeah, it was a little bit of freak out, if you will. I don't know if that's a technical term or not. And maybe that's come down a little bit. I mean, if you look at work pricing on the system, it looks like People are still pricing in multiple cuts through the rest of the year, but not quite that full 100 basis points. But it raises the question, too, about kind of the next catalyst, right? Because this was all kind of driven, well, it started initially, of course, because of some of the economic data. But we get some more economic data next week, including PPI, CPI here in the U.S., as well as retail sales, which I'm more interested in than the actual CPI data.
Well, not even that, but I feel like initial jobless claims just became that much more important after we saw this last week. Yes, the market moved. I think it's strange, but I'm not the one trading the market.
What's next? So we're going to be trading off the beige book?
Maybe, I don't know, or the unemployment number in the beige book or something like that, or the minutes. Gregory Dacko is EY chief economist, and he joins us now for his take. So is this our fate, sort of the moves that we saw in initial jobless claims? This is how we're going to react to CPI, PPI, all the data points now?
Unfortunately, that's the situation right now. Even though the Fed and Fed Chair Powell have been saying that they're not data point dependent, that's the market's interpretation of how the Fed is reacting. Every single data point is overly interpreted. And we know there is a lot of volatility in economic data, including in jobs reports, but even more so in initial claims for unemployment, so that it's a little bit risky to try to interpret the overall sense of direction with 1 week of data or even 1 month of employment data. I think if you look at the broader picture, we are seeing an economy that is gradually cooling, gradually decelerating, with inflation moving towards 2%. And we've been saying for some time now that it's time for the Fed to start recalibrating monetary policy. The longer it waits, the more it falls behind the curve.
So for next week, what's going to move? Is it going to be CPI, PPI, retail sales? Like, what's going to be the trigger, you think, for markets? Or is it just going to have to wait till Jackson Hole?
No, I think first and foremost, we'll be paying very close attention to the inflation developments, right? We're anticipating that the CPI index rose a couple tenths on the month, core CPI as well. That would essentially bring headline inflation towards 2.93%, maybe down a tick relative to last month, and core inflation down also a tick to 3.2%. So still moving in that right direction with indications and signaling that the PCE gauge, which is the Fed's favorite gauge for inflation, is moving closer and closer to the 2% target. So that's really going to be the main point of focus. Then you have the PPI data as a good indication of margins and markups that businesses are imposing. And then you have a reading on retail sales. How are consumers spending? Are they being more prudent? I think we'll see more evidence of prudence, especially on the lower income families.
Well, let's talk a little bit more about that, because we've kind of gotten a preview from that, at least based on some of the corporate earnings that seem to suggest that. We saw that with a lot of the travel sector, with some of the hotels and Airbnb, the airlines, Expedia, if you will, all suggesting that. You saw that with apparel makers. You saw that with food companies and restaurant companies, Gregory. I mean, if you believe what these CEOs and CFOs are telling us, we are already pulling back, and it's not just poor people doing it.
Yeah, I mean, we have a unique vantage point here at EY that we talk with a lot of CEOs, CFOs about how their business activity is doing. And what we've been hearing for some time now is that there is really a bifurcation of the consumer outlook, where you're seeing some consumers still spending freely, those at the higher end of the income spectrum, and then the lower income, more debt-burdened families are struggling to pay for these higher costs for goods, for services, and they're the ones exercising more prudence. And that's why you're seeing this gradual slowdown in consumer spending activity. It's not a retrenchment. We're not headed towards a recession. We're certainly not in a recession right now. But if you look at disposable income, real disposable income, it's been growing at about a 1% pace, while consumer spending has been growing at a 2.5% pace. So that delta is filled in by people using their savings to finance their outlays. That can last for some time, but not forever. And that's why we're anticipating an ongoing slowdown in consumer spending activity.
Could a Fed action change sentiment, consumer sentiment, that is? I mean, I guess what I'm asking is, if Jay Powell comes out in September and cuts rates by 25 or 50 basis points, is that really going to materially change how people feel about the economy?
Yeah, I think generally speaking, yes. I mean, right now we've seen a slowdown that's essentially been engineered by the Fed. Tighter monetary policy, restrictive monetary policy has not simply made the cost of capital more expensive for businesses, but it's also done the same thing for consumers. So both from a consumer perspective as well as from a business perspective, if you have a high cost and high interest rate environment, you're going to tend to be careful with your investment decisions, with your spending decisions. If interest rates start to come down, even if they do so gradually, that will be a signal that it's now time to be a little bit more loose in terms of credit and start spending a little bit more freely. It won't be the miracle solution that ends the slowdown, because we believe that the Fed is way too restrictive, 100 to 120 basis points too restrictive, given the expected outlook over the next 12 months. But it will be a good signal that businesses can start investing, can continue to invest in growth, and that consumers can do as well.
So does that mean you're looking at 3 25 basis point cuts this year, or more than that at this point?
Yeah, we're being very nuanced in terms of our outlook for the Fed. I know that many forecasters, many investors really priced to market when it came to the Fed expectations. You were talking earlier about market expectations for an intermeeting rate cut, 75 basis point cut, 50 basis point cut. You have to remember that the Fed is still quite hawkish when it comes to its policymakers, and that it remains excessively backward-looking. There isn't much of that forward-looking perspective. So unless there's a change in the perception, the framework from Fed policymakers, you're not going to see that rapid desire to start slashing rates. And perhaps what would be most important is for Fed Chair Powell at the upcoming Jackson Hole Symposium to regain control of the narrative and really highlight more of a forward-looking perspective where the labor market is more balanced and excessively restrictive monetary policy represents a risk for the economy.
All right, a lot to chew on this week, and certainly a lot to chew on over the next few weeks. Gregory Dacco, have a great weekend. EY's chief economist there, setting us up for next week, where we are going to get those economic data points we were just talking about, and maybe that's a feed through the week after that into Jackson Hole, or maybe will Powell feel comfortable communicating something at that time?
I don't know. It feels like it really depends on where market pricing is. Like if we're back into that, 100 basis point cuts for this year, 125, he's going to have to say something to rein markets in.
I know we're supposed to be talking about the markets and the economy here. I'm just watching the breakdancing competition.
Oh my God.
And just say, as a child of the 80s who came up with the advent of hip hop and break, this is so cool.
Amazing.
To see this in the Olympics. And I'm just watching these people and I'm thinking, you know what my first thought was?
What?
Simone Biles would be great at this.
Oh my God, so good. But you know that they don't get the music ahead of time?
No,
that it's like random
but
music?
That's great, right?
It's so cool.
So they can't plan.
No, and then it's just how good they actually are.
Yeah. All right. Well, thanks for indulging my
We're focused. We're super focused.
All right. We're going to focus back on the markets here before our producers get apoplectic here and take a look at one of the biggest decliners of the day. Invest in your face? Well, not today. Elf Beauty plunging almost 20% here on the day. We're going to talk about exactly what rattled investors. It's our stock of the hour, and it's coming up next. This is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. The top names in tech are on Bloomberg.
AI tools can help democratize storytelling and turn everybody into a creator. Our vision of the future is individual creators will look like Disney. They'll be able to go from an idea to a final story. They'll be able to publish that. They'll be able to merchandise it. They'll be able to do it across the franchises and stories they create.
Nobody covers technology like Bloomberg. Context changes everything.
Good morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg, Context changes everything.
Playing golf or being CEO of Goldman Sachs?
Oh, definitely playing golf. But one of the great things about golf is when you have a good day and you're hitting the ball and you're making pars, I mean, that's what brings you back.
Time now for our stock of the hour. Taking a closer look at shares of e.l.f. Beauty, down about 15% here on a weak outlook, even after posting sales that topped even the most bullish Wall Street estimates. Jess Menton, who helps to lead our equities coverage here at Bloomberg, joining us right now on the big program. Kind of explain this here, because, I mean, if you look at the numbers, they weren't awful.
Right.
But then you look at the market reaction, and that seems pretty
It's hard to make sense because it beat on so many different metrics. So the reason, if you look at this, it did boost its annual sales forecast, but the problem was it didn't meet the midpoint range that analysts were expecting. Also, Lindsay Dutch over at Bloomberg Intelligence was pointing out that there was really tough year-over-year comparisons that it's dealing with. So that's part of the reason, if you look at this stock now, though, it's down about 14% right now. Actually 15%, so still on pace for its worst day since March of 2020.
I was looking at those comparisons. I mean, you were talking like 70, 80% revenue growth in the prior year's quarters, and this year you're basically at half that, which is still 30+%
really good.
is still pretty good.
Right.
Well, also, like, the e.l.f. has cheaper products. I don't mean cheaper in a negative way. I just mean their average selling price is less than their peers, which in theory should be good in this environment.
It should, and that was one of the bonuses for them, because especially when, of course, we'll have another update on CPI next week, and they do have a category for personal care products that's within that. But when you look at this, that was part of the alternatives and something that really helped them, because that stock was actually up about 30% year to date through yesterday's close before this sell-off. But if you look today, not just this stock, but Estee Lauder, obviously a more expensive, so not exactly in the same competitive type category class, that's down about 2.5% today. Also, Coty's down close to 2%. So also, if you're looking at that space in some of the other companies that are in that kind of world right now, also getting pressure today.
Did you see that column that we had by Bloomberg Opinion, Andrea Felstead, kind of talking about the lipstick index? You know,
that's a great one. It's an economic index.
But
so
she's actually saying that might be broken, that index might actually be broken, because the way we purchase makeup and cosmetics now is just a little bit different.
Well, it was a little weird because I'm sure Alex and I could talk, like during the kind of peak COVID, it's a little bit different when you're stuck at home and not buying those things quite as often. But that is one of the things where, if you talk to portfolio managers, I've had a lot of them over the years say, especially a stock like an Estee Lauder, that is something they always own because they have different family members that they know. They're always going to buy certain personal care products in those types of categories.
Yeah, exactly. And I think the point also is that you buy lipstick when you don't have any other money, and you still want to feel good about yourself, right? But with COVID, to your point, I mean, I don't know. I was sitting at home with my masks on.
That's right. It was different types of products that we were using, right?
But the point is, if I did all that, I still have some of those products, so I don't need to go out and buy more. Hence, e.l.f. is not having like 80% growth anymore at the end of the day.
Yeah, and especially those types of products, though, if you go in the store, I mean, they're dramatically cheaper than a lot of their competitors.
Yeah.
No, that wasn't you in the pandemic?
No, it wasn't you, Romain?
No. Well, the funny thing about COVID for me was I actually learned how to apply makeup, because we were broadcasting from home and I didn't have the luxury of a makeup person. And of course, you know, they don't teach little boys how to put on makeup. So I was watching like YouTube tutorials with my wife, trying to figure out, you know, how to, you know, get that smoky eye.
I was like, please, until you're doing your makeup at like 3 a.m. in your really terrible lit bathroom so you can broadcast lighting from home before your kid wakes up. I don't know.
I remember that clip. I think your daughter came up while you were on TV. It was the cutest thing on Twitter to see that.
She did. She tried to take off my mic in the intro to the 7 a.m. hour. Oh, COVID. Look at those good times. But in all seriousness, Jefferies still estimates the global beauty market expanded between 6 to 8% between 2021 and 2023. So that's still pretty solid, and even slight moderation, though. You wonder how much that's really going to ding these companies.
Yeah, you have a Bloomberg World Cosmetic Index, actually, in the terminal. So BWCOSM is the ticker symbol. So if year to date, it's up close to about 6%. It's a little marginally lower today. e.l.f. isn't actually in this composite, but a lot of the other companies we were talking about are.
Invest in your face. That's all I got to say. All right, Jess, we appreciate you. Thank you very much. Jess Menton joining us there from the Bloomberg Equities team. Coming up, we're continuing to count you down To those closing bells, we got 15 minutes to go. Volume super light. Equities on the upside. You're looking at a solid two-day run for the S&P, but it's really been an incredible 6 trading day over the last 8 days here for the S&P. David Sowerby, Managing Director over at Anchor Advisors, will be joining us. S&P is up by about 0.5%. The NASDAQ up by 0.5. Dow Jones Industrial Average up by 0.1%. This is the close on Bloomberg.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
Liquidity is the lifeblood of an airline. We make very conservative decision making about when we raise funding and how we raise funding. We try to diversify our sources, and we're always very focused on the actual rates. And we like to build in flexibility in these financing structures so that we have an opportunity to prepay debt when appropriate, so that we can continue to optimize the overarching rates that we're paying.
What have you learned with the dynamic move of the interest rates that we've seen from Chairman Powell? I mean, do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well, because things change by the day. I know the folks who aren't willing to invest right now may have large.
It's 1 minute now until the market on closing balance.
So I want to be in front of them. They may not be a buyer at this point, but I do want to spend a lot of time in front of that other set that is a buyer at this point. They're interested. They want to be an early adopter of the stock. They're interested in the story.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money. If I had invested with you, which I wish I had, what kind of rate of return would I have had over that 10-year period of time?
Over 100% a year on average. On average.
100% a year, that's pretty unusual.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that.
Don't miss Bloomberg's interview with the.
So we're looking now to the market on close imbalance. S&P 500, 225 million to the buy side. NASDAQ 100 is 15 million to the sell side. Dow 30 stocks are 80 million to the sell side, while the Mag 7 stocks are 10 million to the sell side.
The U.S. economy is slowing, but nowhere near recession. And earnings, by and large, are coming in okay, consistent with a soft landing. And that's what we need to continue to focus on, is that a soft landing is just that.
Lisa Shallot there, the Chief Investment Officer over at Morgan Stanley Wealth. She kicked us off to the close just about 10 minutes ago, with about 10 minutes to go into those bells here. And kind of interesting, too, because we're talking about economic conditions and we talk about this rebound in stocks today, but you're not necessarily seeing that in the more economically sensitive stocks.
No, which also raises the question, too, what did we see this week? Like, was it technical or was it economic? Like, did we see an actual growth scare, hence the economically sensitive stocks maybe not doing as well, even though, you know, the Russell's not down too much, but or did we see something really technical that was disguised as something else?
Yeah, I don't know. I mean, I feel like if you pose that question to 10 different people, you're going to get probably 8 different answers.
Why you get a market.
And, you know, but I mean, I think it was maybe all of the above, right? I mean, maybe it really was a growth scare kind of mixed with, obviously, the CTAs kind of bailing out. And then, of course, this whole unwind of the carry trade. I have no idea how much credence there is to that, but a lot of people seem to think that was a big part of it.
Yeah, and then you have, on the other hand, though, some are saying, look, if you did have a real growth scare, why didn't corporate credit spreads blow out more? Compared to where the VIX was at like 60, 65, why didn't we have more of a sell-off there?
Larry Summers said that? Larry Summers said that?
I don't know. I said some people say.
Oh, some people? Yeah. I thought you said Summers. Oh,
no.
I was like, really? Okay. Anyway.
Maybe.
We love him. All right. We also love our next guest here, David Sowerby, joining us right now, Managing Director and Portfolio Manager over at Ancora Advisors, with about 8 minutes until those closing bells here. And we talk about this wild week, David, but I think we kind of have to go back a little bit further, kind of to early July. I think it was like July 11th when we started to see a real rotation take shape. And then you had, I guess, just maybe a week or so after that when you saw the S&P really start to slide toward those correction levels. And I guess my question is, when we're trying to suss out whether this rebound that we've seen can sustain itself, which one of those dates was probably more important for the market?
Romaine, by far, it's that July 11th rotation. The average stock in the S&P 500 is positive. The Magnificent Seven are down about 15%. I'm not sure I'm ready to call it a great rotation yet, but I think it's certainly a take heed rotation for investors, because when you start to see this rotation, it can extend for 2-3 years or longer, as we saw post the rotation in early 2000.
Do you have confidence to buy into that rotation given what we learned over the last couple of weeks about economic conditions?
I do. I think if you want to be navigating anywhere, small caps are mildly positive when, again, those Magnificent Seven are down double digit. Their valuations sit at some of the most attractive in 20 years. Earnings in small cap are starting to reaccelerate. We'll see at the end of 2024 that the average stock is coming close to the growth rates that are seen in the Mag 7, probably in that 10 to 14% range. So I think it's got strong legs left in it.
So that seems like it's a buy the dip kind of setup, David, for you. Is that true?
Alex, I think that the second date, the peak of the actual market on July 16th, we know that 10% corrections are never over and done in 30 days. They usually take about 2 to 3 months to settle out. So I think we have to grind through this current environment, add in uncertainty of elections, talk about Federal Reserve independence or not so much independence. We can weigh in on that. So you've got about 2 to 3 years of trying to get back to those levels of July 16th. But I'll stand by that July 11th rotation. I think that's much more meaningful.
You also work with institutional funds, and I'm interested in what sentiment is like right now and how you look at that as an indicator.
Institutional funds, for example, out of bankruptcy, I chair the City of Detroit pension fund. I think what we're trying to find is just meet our liabilities, look for assets that are going to grow above average. U.S. public equities are still, I think, the place to be, closely followed by private credit in the United States, bank loans in particular. I think that's the second place to be. Non-U.S. still trails U.S. markets. That's been the case for the last 25 years. U.S. markets have compounded 4 to 5 basis points better per annum. That's where I think institutional investors are migrating, and they're starting to migrate more, looking more at opportunities in small cap and in value.
When we talk about then how long this plays out, and you kind of gave some good, interesting scenarios about how the rotation could last maybe a couple of years here, does the Fed, or the potential actions by the Fed, I should say, is that going to complicate things at all? Because you have a market that thinks not only are we going to get 3, maybe 4 rate cuts before the end of the year, but they think that rate cutting cycle is going to extend deeper into 2025.
To the Fed's credit, they've got inflation rates at 3% or slightly lower. It was just roughly 2 short years ago that Chair Powell gave that famous Jackson Hole speech about the Fed's recommitment to low inflation, and they simply missed it prior to that with excess money supply growth. But since that Jackson Hole speech 2 years ago, markets in the beginning, they sold off about 10%. But they're up more than 30% since that August 26th speech in 2022. I think that gives credence to the Fed and why we need to have inflation rates low, why the Fed needs to stay decidedly independent. And I think the Federal Reserve's on course for some easing here in the near term. But the key is get those inflation rates at 3% or less. That delivers above average stock market returns.
All right, David. Be safe. Have a great weekend. David Sowerby, Managing Director.
My pleasure. Thank you.
And Portfolio Manager over at Ancora Advisors, counting us down to these closing bells. We just have about 3.5 minutes until we get there, Alex. There was some headline crossing the wire here on some of the weather conditions that we've been seeing really across the country, but specifically up here, up and down the East Coast.
Yeah, just to let everybody know, New York Governor Kathy Hochul declared a state of emergency for New York because we have severe flooding in communities all throughout the area. The storm is currently moving north-northeast, and the governor has said that she's sending in local rescue operations, and the state stands ready to support localities with any and all resources. This is like one of my biggest fears. Did you know this?
No.
Being in a car in transportation in the middle of a flash flood.
Yeah.
Like this actually causes me anxiety to have to worry about.
Yeah, serious stuff here. So be careful out there, folks. And of course, all those folks down south too that, of course, still being battered by some of the storms, the remnants, of course, of the hurricane that swept through. We go back to the markets here to wrap up what has been a wild week with the Dow and the S&P and the NASDAQ in the green, the Russell and the Dow Transports, though, holding in the red. The net effect of it all, though, Alex, is, at least for the S&P 500, is on a price basis, we're pretty much where we were when we closed out last Friday.
It's kind of unbelievable.
I know, which is like, if you were asleep for a whole week, you would never have known anything actually transpired over the last 5 sessions or so. We're going to explain some of the moves that we saw this week, so stick with us. Full market coverage of all the week's action coming up right now, right here on Bloomberg.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alex Steele, here to help take you through the closing bell, a global simulcast. It starts right now. Carol Massar and Matt Miller joining us from the radio booth as we welcome our audiences across all of our Bloomberg platforms. That includes, Carol, our partnership with YouTube.
Yeah.
Quite an interesting end to quite a wild week.
Very unexpected, not exactly how I expected it to play out. I got to say, I'm exhausted in terms of the moves, the swings, the changes in the think, the emergency feel and panic feel on Monday, and it's kind of super mellow today.
I have always told new broadcasters, don't say the market's boring. You got to sell this product. But Romaine, it is not an interesting end. I mean, we're mildly up and we were mildly down this morning. Today is like the calmest day that we've had since last week.
Also, Carol, are you just tired because this is like hour 5 of you guys broadcasting together at this moment for today? But to that point, I mean, volume is really, really light. So you have to wonder if today everyone just put on their positions and just didn't want to take on massive amount of risk into the weekend. And then let's see sort of how futures open on Sunday. And then when you finally have the funds coming in on Monday morning in the cash market, what really transpires.
Yeah, and of course you have a lot of catalysts next week that could actually move this market as well. We've been talking a lot on the TV side, guys, about the economic data next week, as well as a couple of key earnings reports, including out of Walmart, which should maybe give us some insights into the health of consumer spending, amongst other things, as well as we close out this week here, as we get the closing bells here in New York. Green for some of the major indices here after, like I said, what had been an incredibly wild week. We talk about a gain in the Dow Jones Industrial Average for the day, up about 0.1%, or roughly 50 points. Takes a while for these numbers to settle. The Dow still going to close lower on a weekly basis. The NASDAQ Composite is up by about 0.5% here on the day. Is going to close lower on the week. And the S&P 500, 0.5% gain here on the day. And we were just joking, Alex and I here, that despite all the volatility, the S&P is unchanged on a weekly basis. So basically all that volatility, all that hand-rigging was for naught. The Russell 2000, as you can see there on the screen, down on the day by about 0.2%.
Yeah, I'm looking at the best performing names in the S&P 500 for the week overall. Axon Enterprise, the outperformer, up almost 25% on the week. Super Micro, though, at the bottom of the pack, guys, down about 18.5%.
All right, let's take a look at IMAP here. It gives you a nice sort of sense of where sentiment is. All you have to worry about is if there's more red or more green, and there's more green. There's some pockets of red in there too, but no surprise, it's communications